somewhere I take an opportunity to share what is not very apparent from a typical profit and loss account or a balance sheet, but is very critical, and it is at the foundation of somewhere understanding what we do, why we do, a bit of a history, a bit of somewhere the thought process, the strategy that goes behind what we do. And so when this was suggested, I welcome the idea and welcome IIFL to help us put this together. So just to share in terms of how has been life over the many decades. We've been in the business for the last 40 years now. And somewhere I would feel the initial decade was like all, I would say, companies in the industry. It was more inward focused, where we were looking at efficiencies, product connectivities, and things of that kind. And that's when somewhere I joined in Deepak Fertilisers mid-85, when we had taken a large expansion based on ammonia. And at that stage, based on natural gas, we did have an ammonia plant those days. And then we added methanol, we added nitric acids, which was a building block then for fertilizers, for other industrial chemicals. It was also a building block which helped us to manufacture TAN, technical ammonium nitrate. Post that decade, if I recall, we sat together and we started for the first time looking at ourselves from the outside in. And we realized that we are serving three different sectors. One was the fertilizer sector, agriculture. The second was industrial chemicals, pharma chemicals. And the third was mining chemicals. Keeping that in mind, we kind of brought a fairly strong shift in our management, our organization structure. And from a traditional functional structure that was reporting to me, we switched over to a SBU focused structure. And each of these businesses got in the presidents who would look at it in its totality as a business and more of outward focus. So if I look at then the following decade, that shift indeed helped and indeed reposition Deepak Fertilizer in a different kind of space. What we found was because of this kind of industry focus, there was a lot of push and drive to understand each segment, understand the customer needs better, and to somewhere bring in certain kind of I would say fitment into those segments. What it also did was that it helped us to become market leaders in each and every of the products that we were into because of this focus, and we got the highest market shares, the best prices, collections, and so it was something that solidly brought in a good change. If I fast forward to, let's say, some 5-7 years back, my strategy team, along with McKinsey, we sat down and we looked at where do we go from here and how do we shape our next 10 years, 15 years, 20 years, which direction do we go? So we first looked at ourselves, that who are we, what are we, and how do we build and leverage what we have built over the last 40 years so that we can then propel ourselves to the next 10 years, 15 years. And there were two things that we saw, one from an inside out, the other from an outside in. From an inside out perspective, we saw that we had a rock solid 40 years of credible business experience. And that would mean right from sourcing of raw material, inward logistics, manufacturing efficiencies, within manufacturing, safety, health, environment, outward logistics, channel management, regulatory aspects, government policy, grips, and then of course sales, marketing, customer orientation. So we said this is a solid asset It's a solid lever that we need to somewhere utilize when we look at our next growth path. The second aspect that we saw from the outside in, where we saw that we had beautifully aligned with the India growth story. As India grows, we get a lot of tailwind to support our growth, was a natural alignment that had happened. So as India grows and the mid-income level grow of the growing Indian population, we are seeing a shift in the agriculture space and the needs of not only the normal rice, wheat, and the other basic kind of needs, but a move towards the higher end horticulture, the fruits and vegetables. And our fertilizer business was very strongly aligned with that India growth story. As India grows, we saw that India had started making a name in the pharmaceutical sector on the global space, and that's where our IPA, as a good solvent to the pharma sector, was very well aligned. So also the nitric acids were a building block for a variety of specialty chemicals. And as we saw India grow, as we see this China shift to India, this is also something that we are seeing as a beautiful alignment with the India growth story. But the best of all, we saw for the mining chemicals sector, where we said that we saw that if India has to grow, it needs power, for which it needs coal. It needs cement for all its real estate growth, for which it needs limestone. It needs minerals, metals, all of it interlinked with the India growth story. And every single of this, I would say, raw material, or every single of this ore, in order to touch it, one needs technical ammonium nitrate, which is a part of a mining chemicals business. So on one side, we saw an internal strength of 40 years. From an external perspective, we saw a beautiful alignment with the India growth story. And we said, let's build a strategy based on these two strengths. And distilling all of those thought processes over the, I think, 8-9 months of exercise, we came up with 3 strategic drivers. Number one, we said, let's get a size right. Because with size, not only one gets a much stronger grip on the raw materials, manufacturing efficiencies, marketplace, and so on and so forth. But when we said we get a size right, we were also banking on what we had been doing for the past 40 years to do more of it. Because that is where we were seeing also a very beautiful traction with the India growth story. So we said, let's get a size right. The second strategic driver that emerged was, let us do backward integration so that whatever we are doing, we bring a much greater degree of solidity into this aspect, taking care of, somewhere the vagaries that are there in the businesses. That means, backward integrate into, the raw material side. And the third and a very important aspect that we considered was to then look at a journey from commodity to specialty. So I'll dwell a few minutes on each one, and now you will be able to see and correlate with all what we are doing today in terms of what is the overall game plan. So based on that strategy, we said, let's put our heads down and focus on it. Let's then, do our best to deliver these strategies. So we first took up tripling our fertilizer capacities some 5-6 years back. And that aspect, somewhere from a market share of 3-4%, we are now 20% plus in our core command area, in our critical areas that are there. We then took up, our complete expansion of an acid complex at Dahej. This was again 3-4 years back. And we probably are Asia's largest in terms of industrial acids. That gave us a solid grip and foundation on that product line. Currently, as we speak, we are adding one more complete new complex of TAN, technical ammonium nitrate, as a part of our mining chemicals business. And from being somewhere fifth largest in the world, by that addition, we will become among the top three in the world in the league of Orica, Dino, the ones who are in that space, technical ammonium nitrate space. So this is something that has unfolded the first part of the strategy, which is get your size right. And this is something that is built on the solid foundation of our 40 years of doing the same thing, right from raw material to marketplace. The second aspect that we saw was that for all the three businesses, whether it is the fertilizer business, industrial chemicals, or TAN, technical ammonium nitrate, all of it, the key raw material that was required was ammonia. And we were seeing this need emerge that we would have to otherwise import almost 500,000 tons of ammonia from the Middle East to Taloja. And we saw that the logistics cost itself from Middle East to JNPT and then from JNPT tanker by tanker to Taloja, that's how we are doing it today, was itself adding up to around $75 to $80 a ton. And the other vagaries that come in because of the supply chain issues, port congestion and all, were also something that were apparent. And this is something that we have also taken up, where we are looking at a world-scale ammonia plant to meet 100% of our needs of the downstream fertilizers, industrial chemicals, and mining chemicals. But the most exciting part of the journey was the third leg of the strategy, which was this journey from commodity to specialty. And that is something that is my passion. It is something that, we are driving it hard, and we are seeing some excellent results in each of the sectors that we are attempting this. So this is basically, as I would try and explain, it's a shift from commodity to specialty, or one can put it as a shift from product to some holistic solutions, or one could label it as a journey from customer to consumer. Let me give an example of a couple of sectors so that you'll get a clear idea. So in the fertilizer business, the typical approach of the companies in the industry is to identify themselves as we make urea, or we make DAP, or we make SSP, or we make NPK. So it's a more product-centric kind of an approach. Yeah, is my voice clear?
Yes, now it's audible, sir. We lost you for about half a minute in between.
Yeah, I also thought so. Okay. So basically, this kind of a focus from product to solutions, from product to crop specific, is something that we are seeing as a very strong drive. And if I might also explain that instead of just manufacturing fertilizers and focusing on delivering it to the channel, the dealer and retailer, we are now focusing on not just the customer but the consumer, which are the farmers. And we have almost 150, 200 odd agriculture agronomists, in close touch with the farmers to make sure that, that kind of a connectivity, that kind of a pull is something that we can create. And this is something that now we have been at it since the last 3 years. And increasingly now we are seeing that, its reflection in a strong, I would say, performance in the fertilizer sector. including a gradual but a very strong creation of a brand that is emerging. Similarly, I would say in the chemical sector, this move from commodity IPA to hand sanitizers, or somewhere looking at various segments of nitric acid end users. And of course, in the mining sector, instead of just focusing on the product, technical ammonium nitrate, we are more and more focusing on the end markets, the mines of different kinds, and creating products which will fit into the needs of the mines, plus to bring in technology, drones and other aspects to make sure that there are support services that can present a product in its totality as a very good solution. So this is the kind of journey that we have taken up. This forward integration journey is going to indeed transform Deepak in its totality. And this is something that we are, all very positively looking forward to, because this is going to create a complete new phase of Deepak Fertilizer and its relationship with its customers or its consumers. From an investor perspective, and I would want to end at least my monologue from that perspective, that typically this is how I would look at myself. I would like to look at Deepak Fertilizer. That what happens that typically there could be an investment opportunity into a startup, and a startup gives this huge advantage of an upside, because the startup has looked at very closely a unique need of the consumer and focuses on that, and that's where it brings in its knowledge, technology, thrust and drive. The disadvantage with a startup is that it needs to scale up, and there are many startups that fail because they can't somewhere scale up, and during scale up come in all kinds of issues, management problems, people problems, systems problems, and things of that kind. So that's one bucket where investments are available. The other bucket is the steady state businesses. Rock solid, have been there for years, have systems, have scale, have all the things going for them, but the returns are normal returns. When I look at Deepak, I am seeing a unique confluence of the two, where based on our rock solid experience of the last 40 years and a scaled up model and a reach to the final consumers, riding on that, we are bringing in some of these transformative concepts, transformative thoughts in terms of looking at that whole segment in a complete different manner and bringing in technology, bringing in a unique consumer touch to then represent ourselves in a fashion which is unique. So this kind of a confluence is something that does excite me a lot, and I'm seeing the advantages and merits emerging from both ends, and that is something that we are working towards. So now, with this kind of a broad monologue, let me draw in the precedents of each of the businesses to give more insights into each, I would say, business segment. And then, of course, Amitabh can, put an overall kind of a picture in terms of its financial impacts, and then we can open up for Q&A. So, Tarun, I think you would be taking us next, right? Yeah. Thank you. You're on mute, Tarun.
Thanks. Am I audible now?
Yeah.
Thank you. Just checking, will someone be putting up the slides for us so that we can talk through? Or,
Yeah, put up the slide.
We can move on to the next slide. I'm expected to give some introduction about myself. That was the case. Right, good. So I think this is one of the key slides for us. So people, good morning all of you. I will be sharing with you some of the strategic insights and of course the exciting journey that Mr. Mehta talked about, a short while ago in relation to the technical ammonium nitrate business that I'm in charge of. So looking at the left-hand side, of the chart, we have 4 blocks. Broadly speaking, it talks about some of the stuff that we are good at. Mr. Mehta talked about, we have been quite successful in the past in terms of setting up different businesses that we did, in the company, and certainly technical ammonium nitrate is one of them. So the very first block on the left-hand side, in green, it just kind of explains, we are indeed the largest, complex, in India producing technical ammonium nitrate, and that comprises of 3 unique types of technical ammonium nitrate products, which we, in our parlance, we call as ammonium nitrate melt. And then there are 2, so that's in liquid form, and there are 2 solid forms of ammonium nitrate, high density and low density. In short, we call them as HDA and LDA. So besides being largest in India, we are also the only producer of the solid form of ammonium nitrate, which is the second block on the left-hand side. And that really gives us a unique competitive advantage in the market here. Mr. Mehta also talked about our leadership position currently in the world with the current capacities that we have. And certainly, as I will talk about, the map on the center in a minute from now, where we are putting up a new TAN plant in east coast of India at Gopalpur. With the addition of that plant, we will certainly move up the chain in terms of our leadership position from a world scale point of view. So we really are very proud of having this leadership position, not just in the past, but to be able to maintain this and enhance this as we move forward with the investment in the form of a greenfield plant on the east coast. And besides, so the last block on the left-hand side, in addition to the leadership position that we have in the domestic market in India, of course, certainly we cater to some of the international markets which are in close proximity from India, both on the left-hand side of the India map and right-hand side of the India map, so east and the west, and where we are competitive in terms of freight. So that's a kind of a quick snapshot in terms of our position on the left-hand side of the slide. Moving to the center of the slide, where we are showing the location of our new plant, in Gopalpur on the east coast. A couple of pointers for us to be aware of here. Again, Mr. Mehta talked about, getting our size right as one of the strategies to grow the company as a whole. And this is one of the investments we are making in the form of the greenfield plant in east coast, as I said, to enhance the scale that we have in technical ammonium nitrate. So that basically fits with that part of the company strategy, getting the scale right when it comes to technical ammonium nitrate. The reason we have chosen east coast of India currently is probably evident when we see the map, because our main manufacturing facility today, which is in Taloja, is in the west. And the 3 local competitors of ours are also located in the west. Currently, a large chunk of mining and infrastructure activities, which those are the industries that we cater to from a technical ammonium nitrate point of view, they are centered largely around the eastern region of India and the adjoining central region of India. So that's the current situation of where mining and infrastructure takes place predominantly. Going forward, majority of the growth of mineral extraction to drive the Indian economy is going to come from the same region, which is the east coast, which is the eastern region and the adjoining central region. So that's the dotted, dark brown circle or oval shape, on the India map, which basically shows that is really where majority of the explosives consumption is going to take place from a growth perspective as well. And now we can see the strategic location of our greenfield plant in Gopalpur, which is in Odisha. It is right, at the heart of, the growth of the mining activity and infrastructure activity, which will require, all this ammonium nitrate. So, and if we look at the table on the right-hand side of the graph, of the slide rather, you can see the capacities, current capacities, which are licensed from the statutory body in India, which is called as PESO, which stands for Petroleum and Explosives Safety Organization. They are the licensing authority in India for explosives and ammonium nitrate. So as we can see, Deepak Fertilisers as a group, with our current locations in Taloja and Srikakulam combined, we have a fair chunk of existing capacity in India. And once we add up roughly the 376,000 tons of the greenfield capacity to the existing capacity, we are talking somewhere very close to 860, 870,000 tons of ammonium nitrate capacity in India, which is actually going to give us a very unique leadership position and strengthen our position as we move forward. Moving to the next slide. Mr. Mehta talked about how, uniquely the three core businesses of our group are aligned to the India growth story. And this is a chart which kind of summarizes how the TAN business of the group is aligned to the India growth story. So if we start from the right-hand side, where we have three sort of graphs, the first one on the top shows, the infrastructure, kind of growth and spending that is projected to happen as we move along. Below that is the cement, and I will spend a few minutes to explain, some of these. And at the bottom is, of course, coal, which is required for thermal power generation in the country. Now, how is TAN business aligned to the India growth story? That's the key part here for us to understand. So the two main sectors that TAN business caters to from the Indian economy point of view are, namely, mining and infrastructure. So if I start with infrastructure, which is the first graph on the top, basically all the infrastructure projects which are on a pan-India basis, namely whether it is roadways, road construction, highways, airports, ports, power utilities, anything that gets constructed, it needs a lot of things, for that construction to take place. But there are three critical components without which those construction activities cannot happen for any infrastructure. One of those three are cement. For any construction work, usually cement is used. So where will cement come from? Where does cement come from in our context? It comes from what we call as limestone mines. So India has got, plethora of limestone mines across the country in different states, and the companies which own those limestone mines are predominantly the same companies which produce cement. So in other words, limestone is the key raw material to produce cement, which comes from the mining of limestone. And that requires a lot of blasting, in order to get the limestone out of the ground before it can be converted into cement in a cement plant. And that blasting requires explosives, and that explosives requires technical ammonium nitrate. So that's one component of infrastructure, how we participate, it's in the form of cement. The other component, second one, very critical for most of the infrastructure construction work, is steel. Now, where does steel come from? Naturally, steel comes from another form of mining activity, and that is called, it's from the iron ore. So India has got, again, large iron ore reserves that we are aware of. We also export a lot of iron ore to various countries, besides meeting our domestic consumption. And iron ore is the key raw material for producing steel. So the entire iron ore mining, again, like any other mining activity, would require blasting to be done to take the ore and mineral out from the ground, and that blasting requires explosives, and that explosives requires technical ammonium nitrate. So steel, which goes in the infrastructure industry, is where we participate as well. So cement and steel so far too. And what's the third one? When I said there are three key components from our perspective, how we contribute to the infrastructure segment. The third one component of any infrastructure construction is those rock aggregates, the stone chips, as we say. Where do those stone chips come from? So India, and like in any other country in the world where these construction activities go on, the stone chips come from what we loosely call as stone mountains or stone quarries. In one term, they are called as quarries. And these are basically stone mountains. And these mountains are blasted off using explosives, hence the requirement of technical ammonium nitrate there. To break the stone mountain first, and then crush those rocks, broken rocks, in crushers. And there are multiple stages of crushing, depending on what size of the stone chips and aggregates, are required for a particular construction work. And then, those stone chips go in for consumption in construction sector. So these are the three key components of our engagement with the infrastructure sector of the Indian economy. And as we know, as the graph itself speaks for itself, India is poised for massive infrastructure growth, which would mean more of cement requirement, more of steel requirement, more of rock aggregates requirement, which would mean more of TAN requirement. So that's how we are beautifully aligned in one form to the India growth story from a TAN perspective. Coming to the mining part, the rest of the mining, as we know, while India is adding, to its power generation capacity in the form of renewables. Having said that, it's a reality that India, being a developing economy, like most of the developing economies in the world, have had to rely in the past on thermal coal, while they kept on adding renewable forms of energy. So this thermal power generation in India is going to be there, for fairly large chunk of time, for the simple reason that our energy demands, as our economy is growing, the energy demands are growing, industrialization is picking up, that needs more power. Where will all this incremental power come from? Certainly it will come from a mix of the thermal and the non-thermal resources. So coal, is poised to grow in the near future, foreseeable future that we can anticipate. And as there is a growth in coal to support India to meet its energy needs in the form of thermal power generation, coal requires, again, blasting, and blasting requires explosives, and that requires technical knowledge. So again, even from an energy point of view, if we see India growing, over the next decade or two, certainly, TAN business is likely to see phenomenal growth riding on the back of this energy demand of India. So that's the kind of unique and beautiful alignment of the TAN business of our group to the India growth story. On the left-hand side, there are just some, handful of pointers, which I will not get into detail of because they are all in the public domain. I think many of you as investors would have definitely gone through most of this information. But the simple point we are trying to make here is that the other way, the other reason why we are excited about the growth of our technical ammonium nitrate business is because the government of India is reforming the mining sector to boost domestic production. It's all about import substitution. Whichever area we talk about, government of India is thinking about how do we substitute whatever we are importing for XYZ reasons, and then we become self-reliant, Atmanirbhar, as we say. So a number of initiatives on the left-hand side you will see have been taken by the government of India to simplify, to make it easy, to make it attractive for the mining companies and the mine operators, so that mining can be scaled up. When I say mining, it's all kinds of minerals, whether it is cement, whether it is iron ore, whether it's steel, iron ore, whether it is copper, whether it is gold, whatever, zinc, rock phosphates, uranium, coal, you name it. India is full of minerals. All these policies are going to help, increase of mineral production at a faster pace. And that's good news for our TAN business because we will be participating in that growth by way of servicing those segments. Moving on to the next slide. So in addition to the strategic positioning, which we looked at in the first two slides, in this slide, I thought, I'll share with you all a little bit of deeper insights in terms of, how really we manage our business, how do we see our business moving forward. And a number of these bullet points, which I'll briefly touch upon, are actually, indicators of our competitive advantage that we have in the market. So let me start with the first one, entry barriers for any new entrants. Now, what does it mean? See, putting up a new greenfield technical ammonium nitrate plant, is not easy. And that's what we mean by entry barriers. So why do we think so? One reason is because our industry, which is that of ammonium nitrate, is driven by very stringent rules and regulations, purely because of the nature of the product, the sensitive nature of the product that we are aware of. So there are very stringent rules. In simple terms, we call them as ammonium nitrate rules, which have been framed by Ministry of Commerce and Industry. There's an agency there, DPIIT, and then it is enforced by PESO, which I talked about earlier. When these rules were formed, some years back, actually it was at the behest of Ministry of Home Affairs, Government of India level, given the security aspects associated with this product. So it all started from Ministry of Home Affairs and eventually took the form of AN rules, which I mentioned just now. So it's not just, what does it mean for us to have these rules? These rules basically apply right, from the time anyone wants to set up a plant, a technical ammonium nitrate manufacturing plant, then the manufacturing of the product in that plant, storage of that product in the plant, then the transport of that product from the plant to the destination, storage of that product at the destination, then consumption of that product, at the consumption point. All of this entire loop is governed through the AN rules and very tightly monitored, and the compliance that is required is really of very high standards. So that's one reason why it is not easy. It's one thing to set up a plant, but it's another thing to comply to all these rules round the clock throughout the year without an eyelid being dropped, to make sure that we are on top of things. Makes it difficult for anyone to think of setting up let's say a technical ammonium nitrate plant. Second reason why we think it's a high entry barrier is because of high capex. So all of you are investors here, you understand what we mean. We require thousands of crores of rupees to set up a world-class, good quality technical ammonium nitrate plant. So that's automatically an entry barrier. It's high capex requirement. And the third thing is, which Mr. Mehta also talked about in his context setting session, it's the backward integration part of it. It's one thing to set up a technical ammonium nitrate plant, but one of the key raw materials to be able to operate that plant seamlessly without interruptions is ammonia. And right now, India is a net importer of ammonia. So it's unless somebody ties up the back end in the form of key raw material called ammonia, just setting up a technical ammonium nitrate plant is not going to be easy, because then that plant will have to rely essentially on imports of ammonia, and that's not going to be sustainable for a period of time, which is why we as a group have decided to move ahead in investing in our own ammonia plant that Mr. Mehta talked about in the form of a backward integration. So that's the third entry barrier. Unless there is a security of supply of raw material called ammonia, no point putting up an ammonium nitrate. So that probably explains at a high level what do we mean by entry barriers for any new entrants when it comes to setting up a new TAN plant. What about the existing, AN manufacturers? So in the India map, we saw 3 of our competitors' locations, and they're all in the West. Now, all the 3 existing competitors of ours basically are essentially primarily fertilizer companies. So ammonium nitrate produced by them is a byproduct, and it is only in the form of AN melt, as I said earlier in the very first slide, if you recall, which is in the form of liquid. They can't produce in the form of solids, and right at this stage, there is no indication anywhere that we have picked up that anyone is from amongst the domestic manufacturers is thinking of putting up a ammonium nitrate plant for solids. So that's the kind of, again, a competitive advantage that we will continue to carry, because I must add here that the new greenfield plant at Gopalpur in Odisha will manufacture all the products that we are currently manufacturing, all sorts of technical ammonium nitrate, whether it is in liquid form or in high density solid form or in low density solid form. So basically, in all the 3 product categories, we will maintain our leadership by adding the greenfield plant to the existing capacities. Then there's another aspect which we constantly keep an eye on as we drive our strategic growth from a TAN business point of view, and that is the demand supply situation. So ballpark, just to give you people, again, being investors, a feel of how this whole demand is kind of going to pan out going forward. Currently, as we speak, India consumes about 1 million ton of technical ammonium nitrate in all forms. It's about 10 lakh tons. And with an estimated growth or combined growth of infrastructure and mining in India that we talked about a couple of minutes back, assuming even it's a modest growth of, let's say, 5 to 6% 6%, ballpark 6% in some cases. In fact, infrastructure will grow faster than mining. So if you take an average, probably 6%. Now that means a 6% year-on-year growth on 1 million ton of TAN demand today means every passing year, 60,000 tons of additional TAN capacity is being generated in the country. Sorry, TAN demand, I should say, is being generated in the country. So what it further tells us is that every 3 years, a total of roughly 200,000 tons or 2 lakh tons of incremental demand of TAN is going to get created. So next 3 years to 2 lakh tons in addition to 10 lakh tons. 3 years further from then, another 2 years, another 2 lakh tons in addition to the 12 lakh tons at that point in time. So that's the kind of demand growth, even at a modest rate of 6% year-on-year, is what is anticipated, driven by the growth in Indian economy. And which is why when I talked about the greenfield site coming up in a couple of years' time from now for us, taking us to close to rounded off 9 lakh tons of capacity in 3 years from now for our group, you can see how nicely we are positioned in terms of being able to tap into the growing Indian demand by virtue of having the new plant on the East Coast. And in addition to that, the plant being at a strategic location where majority of the growth in mining infrastructure takes place, that will be in the eastern region of India and adjoining central India. So that's the demand supply kind of a situation, and we are, as I said, very well poised to capitalize on this growth using the current and then the new capacity that they will add to the current capacity. Mr. Mehta talked about, I'm coming to the fourth point now on the slide, those downstream initiatives. Mr. Mehta talked about the strategic moves that each of our businesses are taking in the direction of moving away from the so-called products to solutions, or in other words, customers to consumers. And let me spend just a few minutes to explain to all of you what does that mean in TAN context. So what we have been doing, and this is why we have started to use the word downstream, because technical ammonium nitrate is kind of upstream, still a wrong period for certain finished products. But now we as a strategy in TAN business, we have started to go down into what we call the downstream sector. Now, what does that mean? We are gradually, getting closer and closer to the consumers of the finished products and services and solutions. Who are those consumers? These are the mining companies. These are the infrastructure projects, where blasting takes place. So what do we do? What is our downstream journey, as we are trying to get closer to the consumers, and why are we doing it? Simple reason why are we doing it, because we want to add value to in the form of productivity improvement as the mining companies and as the infrastructure projects in the country conduct blasting using different kinds of explosives, which has got technical ammonium nitrate in it. What role can we play to add value to their downstream, operations? And what that downstream operations means is, when blasting takes place, then those broken rocks have to be removed from the area, which is called as excavation of the broken rock. And there is a huge capital investment in the country today in the form of massive number of excavators, which have been deployed in so many mines, thousands of mines in the country, and thousands of infrastructure projects in the country. It's a lot of money, and in the form of capex, which has been deployed. So what role can we play to help those operators in a way that their excavation of the broken rock cost, reduces, because we will be able to create better blasting results. We will be able to give better blasting results so that the excavation jobs becomes more efficient, becomes more productive, and adds to the bottom line of our consumers, who are the operators in this case. What is the other form of downstream, value that we are thinking of? Once the rock is excavated, after being broken, it has to be transported to somewhere. So that's called as hauling in mining and quarrying terms. Hauling cost. A lot of dumpers are flying everywhere to take the broken rock from where it was broken to where it needs to go to. So if the fragmentation of the broken rock is good, because we have applied technology, science, and good, explosives and properties have all been included in that, to generate good fragmentation of the rock which has been blasted off. Not only helps in excavation, productivity and cost, but the fill factor of each of the buckets or each of the dumpers, let's say, of the trucks, which carry the broken rock in hauling, that improves because every trip of dumper now can take more amount of rock. So the number of trips required to remove X cubic meter of broken rock reduces from a hauling perspective if we do a good job in blasting. And that adds to the bottom line of our consumers. And there's a third form of downstream, benefit that we are trying to bring about to our consumers. Certain minerals have to be crushed. So they are blasted off, they are excavated, transported to the crusher, crushed there, and then used for whatever mineral processing or rock aggregate processing. Now the crushing cost itself is very high. If we are able to give a good fragmentation again at the time of blasting itself, not only it helps in excavation and hauling costs, but as the rock goes to the crushers now, the crushing will be more efficient. It will consume less power. The output of the crusher will be more. The revenue generation for the broken rock, for the crushed rock, I should say, for the consumer will be more compared to if the rock was not broken in good size and shape. And you see how value is getting added in the downstream area. So we have deployed a lot of technology in the form of drones, in the form of AI blast simulation and modeling in the mining area, in the infrastructure projects, and that's what we summarize as our journey in the downstream. And this is how we are providing solutions in the form of using TAN as an enabler, and then getting into the solution mode. There are a couple of other things which we are doing in the downstream area from a TAN perspective. We are currently operating a couple of what we call as explosives manufacturing alliances in the form of forward integration. So forward integration from TAN perspective would mean we take one step forward towards the consumer, and the consumer needs explosives, not just TAN. So we are in forward integration explosives manufacturing alliances as we speak. More to come as we go along, similar cases, and that way we are getting closer with the consumers, bringing the finished product to them as well, and bundling them in the form of the finished product and the technological solutions that I talked about to enhance the value in the mines and the quarries. So those are some of the examples. I saw a question before my presentation here, and that question was about solar. Why are we only supplying to solar? Why are we not supplying directly to the mining companies? I hope I've been able to address that. Actually, currently we are supplying to a large number of mining companies directly on the back of this bundled offering, which I talked about. And some of the names of those companies are Coal India Limited, Reliance, Anil Ambani Group, which operates the largest private coal mine in India in Madhya Pradesh, and a large number of limestone mines, namely, Ultratech, which is the L&T Group, Lafarge Holcim Group, which is one of the largest aggregate and cement producers in the world, and Sri Cement, and so on and so forth. So there's a large number of mines who we directly work with in the form of downstream productivity improvements. And that's going to be our business model more and more as we move along, taking the advantage of our TAN position in the country. In terms of very quickly touching upon how do we manage the margins, just to give all of you as investors a bit of an insight in terms of the margin management activities. So what we do is, as you know, any business goes through different raw material pricing cycles, cost cycles. So do we in TAN business. So we have a concept of managing our portfolio through a mix of contract and spot kind of business, and that mix changes from time to time depending on the dynamics that we are faced with from time to time. It's not a fixed number cast in stone for those reasons, and that has been very effective for us to be able to pass on the cost increases to the market, but we are very mindful that as we continue to pass on the costs to the market, to our consumers, we continue to add value to their downstream activity, because that's what makes it sustainable rather than just looking at it from a cost passing on mechanism. So that's really a combination of contract and spot and downstream productivity improvement. Combination of the two, we have been able to maintain sustainability of TAN margins through the volatile raw material price cycles. Last but not the least, I don't want to spend any more time on the last point. The government focus on infra, and certainly this is going to be a big boost to our TAN business going forward. Very exciting times as I see as the head of the business going forward. And as I said earlier, also in addition to the infra, because of the government policies supporting the mines and minerals, extraction, it is going to add, to the tailwind that we are going to get as a TAN business moving forward. So with that, I'll take a pause here, and thank you very much for your patient hearing.
Good morning to everyone. My name is Rajiv Rao, and I'll be talking about the industrial chemical business. So before I get started, I'll give you a brief introduction about myself and my background. So I'm a chemical engineering by education, and unlike many of my peers during my time, I have stuck to chemical engineering throughout my career, and I have been associated with the chemicals businesses for the past 27 odd years. Over these 27 years, the journey has been starting from a process engineer, new product development, scale up of the new product to commercial scale for manufacturing, then techno-commercial scale. So that was a shift from pure engineering to the sales aspect of the business, and then slowly moving on to strategy development. And now I am heading the IC business for Deepak Fertilisers. Some of the companies that I have worked for and I'm proud to be associated with have been a Swedish company in the US for the first 3 years of my career as a process engineer and new product development called Divinyl International AB, focusing on structural polyurethane and polyvinyl chloride foam, and then spent significant number of years at Dow Chemical in India, once again in various capacities that I mentioned, but all in polyurethanes and specialty chemicals of Dow Chemicals. And I had a brief stint as the business leader for specialty chemicals at AkzoNobel in India, and then spent some time at Reliance developing strategy for new businesses for once again in downstream of whatever they do. And now I'm here at Deepak Fertilisers. So here, industrial chemicals, and the next few slides, I'll be talking about how we are driving the strategic drivers, which Mr. Mehta alluded to during his monologue earlier. Next slide, please.
Mr. Rao, you're on mute, sir. Mr. Rao, you're on mute.
Was I on mute during the introduction, or I just went on mute just now?
No, just now once we move to the next slide.
Okay, all right. Okay, great. So now I'll be talking about the industrial chemicals business, and we refer it to as IC business in short. So the business has three segments. The nitric acid segment, isopropyl alcohol, which in short is known as IPA, and the corroded disinfectant solutions. So going forward, let me first look at the competitive edge that we have for all these three segments in India. So DFPCL is the largest nitric acid producer in Southeast Asia and South Asia, with manufacturing sites at Taloja, Dahej, and Srikakulam. And these locations allow us a pan-India presence and being close to customers. And majority of our product movement happens from Taloja and Dahej and a bit from Srikakulam. Amongst all the nitric acid producers in India, we have the most number of concentrations and grades to offer to our customers. So the highest purity or concentration of nitric acid is known as concentrated nitric acid, or CNAS in short. The next major product is dilute nitric acid, which has got number of concentrations ranging from 25 to 61.5%. And the third one is strong nitric acid, which has two concentrations of 68 and 70%. Now, nitric acid is a pretty hazardous and corrosive chemical. So it is very difficult to ship it over long distances overseas. So as a result, the sea freight of transporting dilute nitric acid over a marine cargo is mostly prohibitive, and there are only small windows during the year when imports of dilute nitric acid is feasible. On the other hand, the concentrated nitric acid is hazardous and cannot be transported overseas. So as a result, majority of the consumption of nitric acid in India has to be catered by capacities which exist in India. So in India, as far as our nitric acid share is concerned, we are the market leaders for concentrated nitric acid at 70%, and also market leaders for strong nitric acid at 45%. And we have a significant share at 27% for dilute nitric acid. So thus our largest capacity, pan-India presence, and also the fact that the Indian customers have to depend on local capacities for their usage gives us the competitive advantage in the nitric acid segment. Now, if I go forward to isopropyl alcohol, we are once again the largest producer of IPA in India with a capacity of 70,000 tons per annum. We augment our market participation by importing products, IPA from LG Korea and most recently Shell Singapore, and therefore have had the largest market share in India ever since we started participating in isopropyl alcohol. And this financial year will be having a market share close to 43%. The major distinction which Deepak Fertilizer has in its IPA business, that we are the only one capable in India who can supply high purity Indian pharmacopoeia certified, as well as US, British, Europe, and Chinese pharmacopoeia compliant product in India. None of our competitors have the capability to do that, and this gives us significant edge over any local competition as well as imported IPA. Moving on to our third segment, which is the corroded disinfectant solutions. This business was launched last year at the onset of the COVID pandemic. Essentially, this is a forward integration of our IPA franchise into value-added IPA-based disinfectants and hand sanitizers. So corroded disinfectants, the corroded is a brand, differentiates itself from the plethora of hand sanitizers that are available in the market, is that the ingredient used in our formulations is Indian pharmacopoeia certified, and also the formulations are WHO approved formulations. Since we use the IPA manufactured by ourselves, which is pharmacopoeia certified, this ensures quality and of the sanitizers and disinfectants, which ensures 99.99% germ kill within 20 to 30 seconds of contact. So this is a broad overview of the competitive edge which our three segments have for industrial chemicals. If we move on to the next slide, I will now talk about details of each market segment for the three products, three business segments that I talked about. So if you recall, I had earlier mentioned that nitric acid is supplied in three major concentrations. In this slide, you will see the supply, demand, and market applications for concentrated nitric acid, that is 98% concentration, and dilute nitric acid, specifically the 60% concentration, because these are our two major products within the nitric acid business. The major application for concentrated nitric acid is in the manufacture of nitroaromatics. Nitroaromatics are manufactured by our customers by reacting our nitric acid, the concentrated nitric acid, with compounds like benzene, chlorobenzene, toluene, and chlorotoluene. So these products that they thus generate are called nitroaromatics and find use as intermediates in pharma and agro-industry for the manufacture of active pharma ingredients and agrochemicals. Now, over the past 1.5 or 2 years, the China plus one factor is resulting in an improved demand for nitroaromatics. 30 to 40% of the production of nitroaromatics by our customers gets exported to the developed world, and that is North America, Europe, and Japan. So the increased demand for the nitroaromatic intermediates from India due to the China plus one factor is supporting a strong demand for nitric acid currently and in the foreseeable future. Now, the major raw material for nitric acid, both for dilute nitric acid and concentrated nitric acid, is ammonia. And ammonia costs have been pretty volatile in the recent past. So majority of our concentrated nitric acid business is secured with contracts, price contracts, which are based on ammonia pass-through price formulas. So therefore, any change in ammonia prices automatically gets transferred on a monthly basis in our pricing to contractual customers, thereby securing the business. Now, if I shift your focus from the left side of the screen to the right one, which is the dilute nitric acid, the major applications for dilute nitric acids in the manufacture of inorganic nitrates. One such example is calcium nitrate. So calcium nitrate finds use in the manufactures of explosives used in mining applications, which is, as Tarun mentioned, used for infrastructure, cement and coal, which are critical for a country's growth. Additionally, we are in the process of developing functional nitric acid, which has got unique properties and will be useful in applications like solar, electronics, and steel industries. In the solar industry, these special grades of nitric acids would be enabling manufacture of solar wafers and electronic chips in India, whereas in the steel industry, these new grades would be helping the steel pickling process in reducing costs. So if you look at all of this now, so nitric acid business caters to growth sectors like pharma, agrochemicals, infrastructure currently, and going forward, it will continue to add on new sectors like solar, electronic chip manufacturing, and steel pickling. So the demand for nitric acid is expected to be strong and will exceed supply in the near future, making a strong case for a capacity expansion. If you can move on to the next slide, I'll talk about the IPA market as well as the corroded market. So now with capacity of 70,000 tons of DFPCL in India and a total capacity of IPA, manufacturing capacity of 100 kilotons, India will continue to be a net importer of IPA in the near future. So demand is around 200 kilotons, which is significantly higher than the local capacity of 100 kilotons. As I mentioned before, we have maintained a market leadership position ever since we have been in the IPA business by augmenting our local production with imports from LG Korea and Shell Singapore, and will be at 43% share in this financial year. A major application of IPA is in the pharma sector. 72% of the IPA demand in India ends up at the pharma industries. Now, since we are the only players in India who have a pharma grade of IPA, not only for Indian pharmacopoeia, but other global pharmacopoeia, we become the go-to supplier for the pharma industry wherever pharma grade IPA is essential in their processes. All our competition is not able to supply pharma certified products, and the technical grade of IPA has impurity profiles which are inferior to ours, especially of impurities of class 1 carcinogenic compounds like benzene and unsaturated cyclic compounds, which make them ineligible to be used in any pharma processes. Going forward for the IPA business, we are making a concerted effort to maximize our product placement in premium applications which value purity and the resulting extra functionality and capability it brings to our customers. This ties in with the third strategic driver which Mr. Mehta mentioned of moving from commodity to specialty chemicals. So I'll give you 3 examples as to how we are doing it and the market applications which we are looking to focus on. The first application, as I mentioned, is the pharma application in the manufacture of API as well as formulations with various certifications of pharma grades of IPA. This is ongoing and will put focus on maximizing it further. The second one is a sort of a sunrise sector for India, which is the solar wafers and electronic chip manufacturing. The Indian government is making efforts for India to be self-reliant in these sectors. And these sectors require extremely high, ultra-pure grades of IPA with impurity profiles down to parts per billion. We are developing such grades, and we are hopeful that as this market grows, we will be leveraging that growth along with our high purity IPA grades. Currently, ongoing efforts that we have made to improve the margins of our IPA franchise has been the formulated offerings of corroded disinfectant solutions based on IPA. Now, corroded disinfectant solutions are formulated to achieve strict hygiene and sanitization requirements in hospitals and medical institutions. Our products use formulations approved by WHO, and they provide complete peace of mind and complete protection. Now, the prospects of the corroded business are quite positive, and they will help us in improving margins of IPA. So let's put things in perspective. The disinfectant market was about 115 crores in 2019. It grew 10 times to about 1100 crores by 2020 because of the pandemic, and it's expected to double by 2025 to 2000 crores. Majority of this demand will come from the hospital, for which we are launching products and started catering to. The hospital share of corroded of the sanitizers and hand disinfectant solutions is about 65% of total demand now. It will go down to about 40-45% by 2025, but it will be a growth in absolute terms. The reason the percentage goes down, there are other applications of hand sanitizers, other locations of hand sanitizers and disinfectants where there will be growth. For example, in pathology labs, diagnostic centers, or receptions and help desks of institutions like hotels, restaurants, where there is a high interaction with customers and visitors, especially as the society opens up as the pandemic comes towards its end. So in a nutshell, our IPA business, which has been traditionally a bulk commodity, is slowly transforming into high value specialty chemical, valued for its purity and functionality that it brings to the application. This is only possible because we use propylene as a starting raw material for our IPA, and we are able to control the supply chain right from our manufacturing site to the customer's plant and ensure that the purity is maintained throughout the supply chain. Can we go to the next slide, please? So having shared the competitive edge for DFPCL and market insights of 3 segments, I'll now just summarize the overall business insights for industrial chemicals. First insight is that the volatility of ammonia cost is passed through pricing contracts, which help ammonia cost through pricing contracts, which may help mitigate the volatility. Second, the China +1 factor is spurring demand for nitric acid derivatives in the pharma and ag intermediate markets, thereby creating a strong demand for nitric acid. Due to the strong demand of nitric acid, the demand will exceed supply for the next few years. Fourth, IPA business is shoring up its margins by foraying into value-added products offerings in specialized applications in pharma industry, solar and electronic chip manufacturing industry, as well as formulated corroded disinfectant solutions. India will continue to be a net importer of IPA since the local capacities will be well in short of overall corroded demand. And corroded disinfectant solutions, finally, corroded disinfectant solutions based on pharmacopoeia certified IPA is expected to witness growth in hospitals, commercial institutions, and retail sector, and will add value to our IPA franchise. This concludes my commentary on IC business, and I'll be happy to take questions as per our time. Thank you.
Thank you, Rajiv. Maybe we can move to the CNB slide. Good afternoon, everyone. Let me first introduce myself. My name is Mesh Girdhar. I'm currently heading the crop nutrition business as president at Deepak Fertilizer. I joined Deepak Fertilizer in the end of 2017. I have gone through the journey of entire transition, which Mr. Mehta just mentioned, from commodity to moving into specialty, from product to solution, and I'll share that in details in my next slides. My background, I'm master's in agriculture, and I did a management program at INSEAD at France, Fontainebleau. I have 25 years of experience in agrochemical, seeds, crop protection, and now biotechnology as well now in fertilizer sector. Most of my time I spent with the global multinationals, Bayer Crop Science, as well as Monsanto. I did various roles in these two organizations, right from strategy to business management to head of country, as well as operational manager. My last role was in Singapore. I was heading the global strategy for rice crop worldwide for $500 million. And prior to that, I headed the Indian business of Bayer seeds based out of Hyderabad for 5 years. We can move to the next page. So I'll share with you what is our competitive edge, what kind of portfolio we are present in, and what we have recently achieved in our journey from moving from commodity to specialty, and then I'll take certain business insights. We go forward. So we are basically, fertilizer has three major segments. One is a urea segment, entirely commodity. Second is a NPK and DAP complex fertilizer segment. And third is water-soluble micronutrients as well as foliar segment. Where we operate into the NPK segment of the market when it comes to soil applied product, whereby we have about 1.1 million ton capacity. First thing which was done is the capacity was enhanced 4 years back, and then now we are debottlenecking some part of that and utilizing that capacity. Our key advantage and key competitive edge in the NPK bulk segment, we have two kind of portfolio. One is Ammonium Nitrophosphate. This is a 30-year-old product and brand, which the company set up way back. We are the only producer of this kind of ammonium nitrate phosphate, which comes in a prill form. This is a very unique product because just to give you some technical aspect of the product, that this is a nitrate nitrogen source. Very few products in country has nitrate nitrogen. It's readily uptaken by the drier crops like fruits, vegetables, sugarcane, sometimes even onion and cotton. Then it operates very well when the alkalinity is very high. It is very low pH, right? And it's very important that that's add to the uniqueness of the product. This product is less than 4 pH. And a lot of soils in the western part of the country is very much alkaline, whereby the nutrient gets fixed and availability gets reduced. By virtue of its nature of raw material use, nitric acid based as well as in pill form, this product is readily available, is highly soluble, and this has been liked by the farmers for many years. It's a strong pull for this product in the market. The second segment where we entered by virtue of our investment in N2NPK plant, we set up this 8 lakh ton capacity through a state-of-art Incro technology, the newest plant in the country. This plant can produce up to 60 grades of NPKs with various micronutrients inside. So we launched initially with plain NPKs, but immediately we shifted towards differentiated enhanced efficiency fertilizer product called SmartTech. And I'll explain in my next slide what SmartTech is and how it is benefiting the farmers. This is the first of enhanced efficiency fertilizer in the country, which we introduced in 2018, and we are significantly ramping up that. In total, in both the segments, we are present in 5 major states in west and south, as well as we have expanded to 7 more states outside of the northern side of country to expand our water soluble and specialty business. So in the core command market of Maharashtra, we have close to 1/5 of the share, and the 5 states we have 13% of share. Second segment we operate is bentonite sulfur. India has a large deficiency of sulfur, particularly in pulses crops, sugarcane, cotton, onion, as well as mustard in these crops. And Deepak Fertilizer has the largest capacity in the country, about 50% Indian capacity we have. We have two plants, one in Taloja, one in Panipat. Currently, we are operating at 40% national market share. There too, we are coming up with significant innovation. One of the issue with the initial product was that it does not release fast. We came up with a fast dispersion technology, and now we are adding further value to that. And we are developing these markets in northern part of the country to utilize our installed capacities. The another segment where we operate is the water soluble, which is the drip applied. You can apply fertilizer either through soil or you can apply mixed with water through drip system. And in the country, majority of drip system sits in the fruits vegetable area. And majority of fruits vegetable are grown in Maharashtra, Karnataka, Gujarat. Western part of the country is dominating vegetable that we have largest area under grapes, largest area under pomegranate, largest area under tomato, as so many crops you name. So by virtue of us sitting here, we have a significant advantage in the water soluble business, where we also have about 1/5 of the share of the market. Our high concentration of our crop portfolio is basically on 10 key crops, which are predominantly fruits, vegetable crops, as well as cash crops like sugarcane, cotton, and soybean. Mahadhan is a very strong popular brand, has a very strong recall. It is known for its quality and commitment. What we have done in the last few years is that as we transition our business model, if you see on the right side, that as we transition our business model from being a regional player and product centric till 2017, by virtue of the strategy, as our CMD mentioned in 2016-17, we started focusing on solution, and accordingly, not only product level innovation, we did significant efforts at the building our organizational capability, which means that we just don't sell and supply. We actually seamlessly engage with the end consumers and create demand. We demonstrate the product to the farmers. We evaluate them into multiple locations. We find out value proposition. So this needed a stronger capability. So today, in the last 4 years, we have set up a team of about 270 market development officers and nearly 300 plus field team, which is engaged in selling and demand creation activities on the ground. Apart from that, we have very strong R&D team with 4 PhDs working there and about 22 people R&D team, which is continuously delivering us new product, which I'll share in my next 2 slides, what kind of evidence we have that we are able to develop differentiated product and solution, launch them and scale it up. Next page, please. So this is the one example I would like to share with you that what we are saying in the previous page, that our strategy is to move from product to solution, from commodity to differentiation. So what? Are we able to develop it? Are we able to demonstrate that we can scale it up? This is an example whereby SmartTech technology, which we launched in our NPK portfolio in 2018. And till last year, we moved from nearly about 13,000 in the launch year to 438,000 last year. So significant ramp up, we have been able to do it. Now, what is SmartTech, first of all? It's very important to understand that what value we are bringing to the fertilizer sector. To give you an example, that if you apply nutrients in the soil, lot of that get fixed by virtue of chemical reaction in the soil. For example, if you apply 100 kilo phosphorus in the soil, only 23 kilo is available. Rest, about 77 kilo gets fixed by virtue of chemical reaction. It gets bind in the soil. We identified this technology through a global partner in 2016. What it does is it actually unlocks the nutrient, which means it enhances the efficiency of the fertilizer, whereby more nutrient is available to the crop, as well as it enhances the microbial population. A lot of organic matter is needed to be built. Our soils are depleting in organic matter. Biological flora is reducing. So by virtue of these 2 technical benefits, this helped the plant to grow in the field much better with a better root system, better shoot system, better fruiting bodies. What we have seen over the last 4 years, there is a consistent increase of 12 to 15% yield achieved by the farmers. So this was the biggest evidence of the technology performs. The second, we need to scale it up. And for that, we have this significant market development focus organization. a lot of people on the ground through below the line activities. Our team is working on seeing is believing concept. Unless a farmer does not see benefit in his own field, he's not going to adopt your product. So the team has conducted more than 25,000 field demonstration in their field, comparing against their practice, where farmer himself is able to see that he's getting the benefit, and hence there is a repeat sales happening. By now, nearly 10 lakh metric ton has been sold, and about 2.5 million farmers have experienced. The retention rate is very, very high. There are not many dropouts happening. Every farmer who is buying the product technology once and coming back again. And in this technology, the key benefit we could demonstrate is the marginal cost benefit ratio of 1:10, which means if farmer is paying 1 rupee more, he's getting 10 rupee back. Hence, we are able to also translate the MCBR into our premium, and hence the financial performance, which you are seeing. Next page, please. Hello? Am I audible?
Yes,
Yeah,
sir.
just going on to the next page.
Yeah. The now second example, as I said, that the strategy which we chose is to continually bring innovation as a competitive advantage. Sorry, this is not the page. Can you go back to previous page, please? Yeah, crop tech page. After smart tech, we are going forward with newest launches. So we want to bring in continuous every year newer product and change the technologies with better value add. And this is the next level of smart tech technology, which our R&D team have developed, and we already launched in November. Now I'll explain to you what is this. This is called crop tech, which we recently launched. If you look into farmers' perspective, farmers really use sometimes overused fertilizer, sometimes underused fertilizer. They are not technical experts to bring in a balanced nutrition. Even human beings are not, because we have seen now in this pandemic that we need to use zinc, we need to use vitamin B, we need to use vitamin C. Micronutrient impact on immunity was not known. Only in the last 2 years, we start knowing that micronutrient impact on the immunity. Exactly similar, the crops need 16 different elements, these 16 different nutrients, and most of the farmers have been using 3 or injudicially using micronutrients. What we have been able to do is that we have been able to, through a complex form of production, we have been able to bring in 8 nutrients together in 1 grain of fertilizer. And that's what you can see on the right side, that each fertilizer grain has a complete nutrition and a balanced nutrition. Number one. And second, we have been able to encapsulate that with enhanced efficiency technology, which we brought in the smart tech. By bringing both of these two, we have been able to make the crop specific product, which is tailor-made for a crop specific requirement. We have added those ingredients in that, and they are ready-made products. And we have now launched that kind of product into a complete solution. So we completely moved away initially from a commodity fertilizer to differentiated fertilizer. And now we are moving completely into solution whereby on an acre, a farmer can peacefully get a complete program of Deepak Fertilizer led by crop tech. So these 2 examples are very important to understand that the strategy we chose need as continuous innovation. And we are able to demonstrate that we are able to launch continuous products. Second, we are able to demonstrate as well as that we can scale them up. We have a right ingredient in terms of not only just technical knowledge, but also manufacturing capability, but also the capability in the field to actually scale it up, the benefit and demonstrate benefit to the farmers, because that's where we create value in the end of the cycle through consumer across the value chain gets benefited. So next page, please. In total, on the left side, in pre-2018, we had all portfolio, which was more, you can say, everybody else, a similar portfolio. Today, as we sit, we have completely transitioned our portfolio either to smart tech, which is enhanced efficiency fertilizer, or shifting now to further to crop tech. And 24-24-0, anyway, it's a unique product. In the second basket of our portfolio is the non-subsidized portfolio, which is a specialty fertilizer where we have bentonite sulfur as well as water soluble. Exactly same strategy we are using there as well. that even in the water-soluble fertilizer, we are now shifting towards all-in-one fertilizer, which is actually crop-specific, and it has to be applied at different stages. And they are also tailor-made, more made for a particular crop and giving good value. All these products, which are all-in-one or crop tech, not only enhance the output, but also they reduce the cost for the farmer, because we are optimizing the formulation and product for a specific use with a high efficiency. It is an environmental benefit. It is benefit for the country. We are not adding much chemical in the field. So all that positives are actually supporting us to really create ourselves as a player who is different from the whole industry, not just focused on volume or price, competitive pricing, but focused on creating value through differentiated product, as well as pricing them based on the value, not really based on the commodity. Next page, please. From an industry perspective, as I start laying out earlier, that if you see, India has about 60 million, the box in the middle, about 60 million ton market, nearly half plus half is urea, rest half is DAP and NPK. If you look into total consumption perspective, country is only using 171 kg nutrient per hectare. China, which is similar market, is more than around 3 times of ours at 506. Even Bangladesh is using much more nutrient. So we have an opportunity that some part of India is using lesser nutrients, some part of India is using over nutrients. So we have opportunity in growth in both the areas. Opportunity A is the market of complex fertilizer, which are more balanced NPKs are growing at a rate of 3% annually overall. But also there is an imbalanced use. You know, the nitrogen is used very high in the country because of the high subsidy on that. And in some cases, P is low, some cases K low, and micronutrient deficiencies across the country. So that's another opportunity for us to grow. And that's where the industry overall is growing when it comes to complex fertilizer level. Within that, there are certain niches to grow. And that's the industry perspective for soil applied fertilizer. Second is the water soluble fertilizer. So as you know that as water is becoming a key issue, lot of farmers need to now grow the same crop with less water, and they are adopting into drip irrigation system. India has close to 6 million hectares of drip irrigation today, but the water soluble use is only 1/5 of that. So there's a huge opportunity to train farmers, to educate farmers, to bring in better product and solution so that the adoption can happen. Because in some crops, adoption is nearly 100% like grapes. In some crops, adoption is 50% like banana. And crops like sugarcane, adoption is only 3%. These water-soluble fertilizers are highly efficient. They are 100% available to the plant. They are low rate, and they're directed towards the growing parts and timing of the crop. So they're very efficient products where we have seen in which crops farmers have used, they have grown very fast. There's significant opportunity for us to play a role there, to bring in better product and work on the market so that this market can be grown. This market is currently growing at 6% CAGR per year. Next page, please. So coming to the overall business insights, and I started sharing that in my previous pages, but I'll come to these questions one by one. So differentiated journey achievement so far. I explained earlier that Smart Tech is the first mega, let's say, differentiation product which we launched, and whereby we have completely transitioned in the last 4 years. Actually, we transitioned in 2 years, completely moved to Smart Tech, and now we are no more selling any commodity, whereby farmers have benefited, channel have benefited, as well as we have benefited. So this one example which we have been able to do that. The second is that we have launched all-in-one crop-specific solution for grapes last year, and we are seeing significant demand coming. There too, the product is into 3 different phases, and whereby we are not only able to see increase in the quantity of the produce, but also quality of the produce, better shelf life of the produce, exportability of the produce, and that all go into the value. Next question is next growth phase, debottlenecking. So we have currently 1.1 million capacity for bulk, where we can produce either Smart Tech or Crop Tech or NP put together. Practically, we are able to use about 9.5 lakhs today. We have a small debottlenecking going on, doesn't need much capex. We have all necessary approvals in place from environment perspective and production perspective. And as we are able to ramp up the demand, we have a capacity available to grow for us. And we have already all the adjacent requirements has been completed in terms of port facilities, in terms of evacuation facilities. All whole pieces have been tied up well. With small debottlenecking, we'll be able to use complete 1.1 million capacity. Third, what is our example of MCBR experience? I mean, this is a terminology which, not just a terminology in our company, in particularly CNB business, whereby we actually living this course, something called MCBR, because without understanding the intrinsic value of the product, we don't bring it to the market. We invest into R&D fields, understand value, then we do a multi-location replicated trials, then we do multi-location, multi-crop trials, different places, see the marginal cost benefit ratio, how it benefits the farmer. It could benefit either through increase in output by virtue of tonnage increase in the yield, or by better realization of the price by the farmers because of better quality of good nutrition program, or through cost reduction. All three we combine and get into a net farmer benefit in rupee value. And we have seen that normally 1:5 is a very attractive MCBR, which means you spend 1 rupee and you get 5 rupee back in agriculture. And we are currently delivering products with a 1:8 to 1:10 MCBR, which means we are leaving some value on the table. It could help into transition into future financials, or it could lead us is growing volume faster. So these are the two opportunities, and we have seen that farmers have really appreciated this 1:8, 1:10 MCBRs on the ground. And farmers are smart. They look into their field and they understand what the product is delivering. The fourth question is impact of raw material on the CNB margins, short and long term. Raw material volatility is real. I mean, India imports all the raw material, and they are bound to fluctuation based on demand supply of global situation. Normally, about 75 to 80%, 85% is a raw material cost in production of bulk fertilizers, and that impacts everyone. So normally what happens as and when raw material price changes, it impact the whole industry. The whole industry either through a pass-through route in the market, or sometime government intervenes and subsidy goes up, particularly in the subsidized for fertilizers, depending on what happened in the last 1 year as well, whereby DAP subsidy were increased. But in general, that's a overall market perspective, because everybody is in the same compulsion to take a pass-through call as we are, as raw material goes up. But we have tried to ring-fence our business model by really going into this so-called value-based portfolio, a solution-based portfolio, where we don't need to really compete on price, but we need to compete on value. And we use that headrooms whenever there is a high or low raw material volatility. So on a long-term basis, we are enabling ourselves, we are ring-fenced ourselves by virtue of our strategy. Competition from other players in the differentiation journey. Yes, I mean, in any differentiation, competition can catch up. But we have taken a good start. And in order to continue to take our lead, we are doing continuous innovation. And life cycle management is very important. And that's why we set up the dedicated R&D team and process and facility in place, so that we can continually launch newer differentiated product and stay ahead of competition. In some products, we have exclusive access, like the Smart Tech technology. We have an exclusive access in the country, whereby certainly exactly similar technology won't be available for a longer period for anyone. So the route we have chosen is a continuous innovation route and continuously life cycle management to stay ahead of the curve. Growth strategy for non-subsidized fertilizer. Nearly 20% of our portfolio today is non-subsidized. By revenue, by margin, it's higher because it's not under subsidy regime. And in this fertilizer, as I said, that number one, we need to have capacity, and we have about 50% of bentonite sulfur capacity in the country. We are ramping up growth in North India. We have put dedicated team to actually utilize our capacity setup in Panipat. The second majority of growth is coming in water-soluble fertilizer. There too, we have dedicated partnerships to access raw material, to access even finished product. even to access certain technologies. Based on that, we are launching newer products as well as sustainably able to supply, as well as us being in the western part of the country, which is the largest non-subsidized market, and with the good Deepak Fertilizer brand presence, it's supporting us go forward. You may know that I think the government is continuously launching new programs and new incentive, new benefit in agriculture. Many of them are going towards value chain side, whereby setting up FPOs or setting up of export processing zones or setting up of one district, one crop, which Government of India recently launched. A lot of these are actually directed towards fruits and vegetable, and which is where our core focus is fruits and vegetable crops and developing product solutions there. So the government policy enhancing fruits, vegetable, nutrition, food is very much aligned. We are very much aligned to that. Even within the fertilizer sector, we are aligned to where government is focusing. The other part is that a lot of initiatives going on the credit financing as well as input support for the farmers also supports us at an overall level. And for some crops, there is a continuous price support like soybean, cotton. As the price supports are rising, MSPs are rising, that are making farmers more economically viable. And they have a good gap to raise potential yield. And our products and technologies would be required to fulfill that gap of potential yield and benefits. So that's it from my side, and we'll address the questions in the Q&A session.
Okay, good afternoon, everyone. My name is Shyam Sharma. I head basically the strategy and transformation piece for Deepak Fertilizers. Just to give you a background, I have been working in both the B2B and B2C segment over a period close to now 30 years and have been in various roles. Earlier, I was the business head for mining chemical business, and prior to that I have worked in FMCG paint industry as well. So that in short is all about me. I'm basically an IT ISM Dhanbad graduate with my MBA from Jadavpur University, Calcutta. So can we move to the next slide, please? I just wanted to give a view of the top 5, how do I say, the digital backbone or the digital transformation initiatives, which we began a journey about 2-3 years back, but we are in the process of few of the implementation as well as have successfully rolled out few of them. So the first being the earlier model of SAP ECC, we have moved to SAP S4HANA. For the transaction purpose, while we did long time back in 1920, now we are moving for the best of control and optimization by comparing it with the best practices. We have a partner working with Dilate to make sure that we identify all SOPs, etc., which can be added or add value to Deepak system, the automation opportunities which present within, and according to priority drive that within the respective businesses as well as functions as and when required. Along with it, as we have gone down, there are few unique things which we have done. There are many functional enablements which has happened, which is number one is like the EBIT or the COPA implementation. This is one of its kind which we have done, and it's basically made to fit DFPCL, how do I say, financial statements, etc. These are largely designed internally, and there's no pre-pack design for this. Then now currently we have the business intelligence as well as the output reports, which is consistent across the business. Other than the standard custom, we have, how do I say, ready-made business reports and functional reports, which basically becomes the background for a single source of analytics and review across all businesses. Pleased to know that we are almost at the end of the journey, but some of the best practices, etc., as we go along in another year and a half, we'll be able to implement with respect to SAP S/4HANA, and it would be one of the best in class implementation in India itself. Along with SAP S/4HANA, the second part which we have done is integrated planning. It's nothing but end-to-end planning. So, for example, we are now, how do I say, completely automated to capture the demand from a farmer right down up to the district level or a Zilla level up to and link it to our production planning, brand-wise product price. So we have different modules of sales and operations planning built in, which rightfully starts with the demand planning, which comes from the market up to and linked with our production, etc., our plans. So that's end-to-end supply and operations planning, which helps in the RM planning, etc., and it's completely end-to-end. As a further add-on, we have added the financial planning and analytics tool, which basically helps us to monitor and adjust the annual operating plan and the rolling forecast accordingly. As a simple thing, SAP, along with the different NR plan modules, which is basically in the SNOP and FP&A, enables us a solid backbone for having a single source of truth, right from planning to this, whereas the basic engine being SAP for capturing all the transaction data. And that is acting as a single source of data for all businesses, all functions, and there's a single truth across the organization. Now, while business functions are, etc., are integrated, the third important piece which we are doing it is in manufacturing on the operations. We are now implementing the smart factory concepts at 5 of our manufacturing locations. This journey started 2.5 years back. We did certain POCs, the proof of concept, small studies to establish its efficacy in our system. And now what we are doing is we have already covered 2 major manufacturing units of Taloja, and now there is a complete exchange of data and communication which is happening through IoT. And over a period of time, we will have a system of intelligent plant framework for a real-time reporting and notifications all along the manufacturing locations. This gives access to the plant operators, to the supervisors, as well as for making sure that the manufacturing debottlenecking or the issue are handled upfront. Most importantly, there are other modules like condition-based monitoring, as well as predictive maintenance, which can be run through that. But the basic model of having a IPF or the intelligent plant framework is already under implementation. This is another 2 years of it. We are currently into our second locations of Dahej, where we are doing a POCs, certain proof of concept, and then we move over to the rest of the location. But that's the basic where all plants would be interlinked and all data would be very, very simply transparent and basically for control, etc., visible to all. The fourth, which is also a backbone, is basically a finance excellence program, which we are driving in, is basically trying to address few areas of finance where we thought that centralization and automation across business verticals, as well as in certain functions, as well as different manufacturing locations, would add a value to the organization. So currently we are on the verge and completion of accounts payable centralization and automation. This will be rolled out and completed within a month of 2. Once again, with a partner, we are following it vigorously. And thereafter, we will go into the centralization of accounts receivables in phased manner. This will allow basically a system-driven control and more so enhanced productivity or suitable vendor management system, etc., in place through this excellence program. Lastly, but not the least, and most importantly, whatever the top four initiatives are basically the backbone which cuts across and runs across time and basically ensures a single source of data, truth, and a way of working, a change of way of working across and supporting business and functions as and when required. Lastly, and not the least, as you are aware, we are into implementation of few large capex projects, and we are now implementing what is known as integrated project management system. This is largely to make sure that we have effective monitoring and control over the project activities. There are no overruns, etc. There is timely execution. The capex is managed effectively, and more importantly, both adherence to site compliances as well as the statutory compliances are well met in time. So this is a process which is just started, and 6 to 8 months of implementation and firmly entrenching within the business will allow once again a successful, how do I say, a project management system within Deepak, which can run in the long term, giving and adding value to the Deepak organization as a whole. Now, can we move to the next slide? While I have provided the areas which provide cuts across, how do I say, the core functions and Deepak and its various subsidiaries, we also pleased to inform that as and when, for example, automations or arising out of SOPs or arising out of the needs of the business, we also take various applications which basically automate the processes within or add value to the respective business. Just to give you an example, in crop nutrition business, we are building up a data analytics platform or building a data mart where all data sources are analyzed at a farmer level, at a dealer level, at a how do I say, competition level, at a nutrient level. All this will be visible for a particularly brand placements, etc., at a particular farmer. At the same time, for enhancing reach, for reaching out to farmers with the correct set of products and brands, we are building a digital marketing platform. We are also planning and installing a light CRM for our Sarthi farmers, which are basically the premium end of farmers, and they are advocates for us in the field who basically are smart tech users over a period of time and have vouched for the brand usage and efficacies, etc., as we have gone. Establishment of e-commerce channel and also crop advisory. Now, these are in different stages. We work along with business to make sure that these needs, etc., are captured, implemented stage by stage as per the satisfaction, etc., of respective businesses. Similarly, just to give you mining chemicals, we have a set of warehouses, both at plants, the FIFO, the first in, first out, because there's a shelf life associated with mining chemicals product as well as other products. So we are trying to implement a system where we have a first in, first out platform for both plants and warehouses, and there is no product which goes waste, both in the storage as well as in different warehouses across the country. At the same time, there are a few exercises which we are doing for freight rationalization and adding of certain modules in SAP, so that there is, while the transactions are basically captured as of now manually, can be automated over a period of time. And a system of bank reconciliation as well as customer reconciliation, if it could be done at the customer or dealer portals or the company portals directly, are few of the few of the approaches which we are taking. Similarly, for industrial chemicals, we are trying to have a system of automated certificate of quality assurances for key products, a chemical app for our customers, and where they can have both the material safety data sheets, technical data sheets with respect to our own products and applications related queries be interface. So it's very, very specific to our chemical businesses. Also, pleased to inform you, also in the HR sector, we are doing certain need-based, how do I say, transformation or automation exercises. For example, we are centralizing a travel management platform where anybody would be able to place their needs, etc., and it would be booked automatically rather than through the how do I say, the normal route which used to be followed earlier. We are also, in terms of how do I say, in the management system, the performance management system, while it is already there, we are trying to also see the best in class performance management system of people, etc., which we can compare. We already have SAP success factors, and can we add something more to it, or alternatives which can add more value and be more effective at a ground level for the entire team, and that's also being evaluated. Other things for monitoring, etc., is the work from home productivity. We are working with few vendors, etc., in terms of, because that's going to be the way. We'll be working in a hybrid model as we think, but we need to be prepared ourselves in terms of how do we measure the productivity of employee. The other few are contractor management productivity tools, which so many outsource this thing, in terms of how do we manage people, etc., who are at remote sites. So that's one of those transformations or in automation opportunities which we see. So there are many more examples. The list goes and gone, but these are the few priorities which we have taken as of now, and this work continues. And there are many other more in the list, but from taking the priority list from the business, we are keeping on adding and making sure that along with the backbone of the organization, these initiatives keep on adding and add value to the entire businesses, functions, etc. So thank you. That's it from my end.
Good afternoon. Am I audible?
Yes, sir, you are.
Good afternoon. My name is Arun. I head the project group, and I'm a career project management professional. Spent close to 16 years with Larsen and Toubro and 6 years with Reliance, wherein I was instrumental in setting up some of the world's largest petrochemical and refining complexes. I'm a mechanical engineer from REC Jaipur, and I did my MBA from SP Jain. I'm a member to the R&D Council of PMI and also a standing member of the ECRI Council of Risk Management. So I joined Deepak Fertilisers 1 year back, to be precise, as on today, and looking forward to an exciting time when a lot of large projects are under execution and a lot of ideas being converted into project. So I will take you through two of the large projects that we are executing now and how we are doing it, so that you will come to know the basics of our examples and our fundamentals. Next slide, please. So we as a project group work with a simple vision statement, which says to do things correctly in time. So to do things, we talk about execution excellence. Correctly means governance, and in time means the time value of money. And with that principle in mind, we work in 4 verticals within the project team. One group which works for the pipeline for the future. Then there is a group which is working on the growth projects, which we are going to talk about now. Then there are few sustaining projects wherein we give inputs which will lead to the sustaining projects getting completed. And we also work in a lot of projects which are compliance oriented, related to emission control or water conservation or drain controls and all those kind of things. So 2 large projects which we are currently executing are, one is a greenfield ammonia project which we are executing at Taloja. And the second one is a greenfield technical ammonium nitrate project that we are building up in Gopalpur in Odisha. The ammonia project we started the execution on 1st of April. And till now, we have achieved close to 60% of progress. And we are looking at completing this project by end of March mechanically and commission the project by early May. The project is splitted into various packages, and Toyo Japan and Toyo India are the key EPC players who are involved in it. This project is licensed by KBR, and the technology is a crest-based technology which has got the lowest power consumption and the lowest emission component as compared to the equivalent projects by other licenses. We have a PMC for this project, which is ICONS, and a number of activities are being done by our internal team also. And externally, we have got relationship with the MIDC for the water supply and GAIL for supplying the gas, and we are in the process of tying up the gas agreement. The project at Gopalpur, we had the formal inauguration of the project by the Chief Minister of Orissa on 9th of December. The contract for ground consolidation and related work has been given to Tata SEZ, and the work has started now. And this project is licensed by Casale, and this is one of the, I would say, the best technologies available in the market, which can enable you a wide range of products from the same stream. And we have the equipment supplies from Orica for some of the key equipments, and the rest of them we are doing ourselves. And this project is on an EPCM mode, where Tata Consultancy is our EPCM partner. Next slide, please. So coming to ammonia project, we completed all the basic engineering of the project, which includes 90% model review, the HACCP studies, the ETAP studies, the emission control studies. Almost 100% of the civil and structural engineering is completed, and nearly 95% of the foundations are casted, and we have started the equipment direction also from the last month. The infrastructure side, the pipe racks of the ISBL process plant is completed, and the pipe loading is started. And similarly, the offsites, we have got 4 packages, of which 2 packages are already available with us. And the balance, the power plant is contracted to GE for the turbine and the Thermax for the boiler and HRSG. All the orders and all the execution is in time, and we don't see any major delays in this project, irrespective of the fact that we had an extended monsoon which ran till early December. The TAN project, we have just started. The engineering of the project is close to 41% completion. The total progress of the project is maybe 12 to 13%. The construction work is just starting at the site, and this is a 30-month project, and we'll be closing the project by Q2 FY25. So this is in brief the project status. I'm open for any questions or any clarifications. A few snapshots of the site. We can see the control room and the reformer structure, the key pipe rack, which is already constructed. We can see the tabletop foundations where the compressors are going to get erected from next month onwards. Next slide. These are the snapshots of the tankages which are getting jacked up. We have started the jacking of both the tanks at the site. We can see the water substation and the cooling tower on the other side, which we are planning to complete. This project, we are planning to do the commissioning in a sequential manner by bringing in some external investment. What we are doing is we are bringing in imported DG sets and instrument air dryers to advance the commissioning by 6 months by starting off the commissioning activities from the month of May 22 onwards, so that we have an assurance on the end delivery of this project without depending upon any of the external factors. And as Mr. Shyam explained, IPMS is the key investment in project, which we are integrating the Primavera and the wrench and the 3D model in one platform, by which we have control on cost. We are bringing in a 5D control basically, which is very essential, which dovetails the risk assessment and opportunity management into the same system, and live assessment of the project status available to all stakeholders at all points. That's all from my side.
Well, good afternoon, everyone. My name is Amitabh. Unlike my other colleagues, I've been sort of in more frequent interactions with many of you, one-on-one, and sometimes in groups as well. As a brief introduction, I'm a chemical engineer by graduation. I have sort of worked at the shop floor for 3 years before I started my finance career. And for last 27 years, I've been working with commercial banks, private equity, and corporates. This is the 5th running year for me with Deepak Fertilizer. What I would do in a couple of slides, I will not go through each one of them. It's more for some of you who perhaps have not been interacting with us in recent times. So I leave those slides for your consumption. But what I would try doing is to sort of summarize what my colleagues mentioned in their presentations earlier, and also give you a brief overview of our corporate structure and our financial performance. Next slide, please. While I think most of these aspects have been covered by my colleagues and Mr. Mehta as well in his opening remarks. But one aspect that I would want you to sort of pay a little attention on in this slide is that while our overall capacities in the industrial chemical are close to 1.36 million ton, and in case of mining chemicals, it's 486,900 tons. In crop nutrition, both bulk and specialty put together, we have capacities of 9,85,700 odd tons. Overall, while last year, if you look at our FY 2021, we were more like, I think 46% top line came from fertilizer. and the balance from chemical business. But in terms of our segment results at EBIT level, the ratio was more like 78% on the chemical side and 21% coming from crop nutrition business. While this ratio quarter on quarter, year on year may change somewhat, but the underlying point here is that from a bottom line perspective, we are more, I would say, tilted towards chemical business, while our crop nutrition business plays a relatively, I would say, a second fiddle role in our bottom line. Next slide, please. I think these are each one of these businesses on the left box. My colleagues have explained, but just sort of one quick view on the production flow chart as you see here on the right side, where our, say, natural gas in turn goes into through ammonia route, goes into our both our chemical and fertilizer products, and ammonia in turn goes into dilute nitric acid, and dilute nitric acid then in turn also along with ammonia goes into our products, both fertilizer and chemicals. So in a sense, it's I would say operational synergies, but very diversified end user segment. And that in a sense, the volatility that may arise either quarter on quarter or year on year, it in a way helps us address those volatilities, because the seasons where, let's say, fertilizer is a low season, a TAN mining chemical would be a peak season for mining chemical and vice versa. So in a way, that's one aspect that I just wanted to leave with you from this slide. Let's go to the next slide, please. In terms of our corporate structure, for some of you who are new, we Deepak Fertilizer and Petrochemicals, which is both operating and holding company, is also the listed company where the industrial chemical business and the value-added real estate business is part of Deepak Fertilizer. SmartChem Technologies is the 100% subsidiary of Deepak, which earlier in 2017 we had through a demerger process had crop nutrition business as well as the TAN business are part of SmartChem Technologies. SmartChem Technologies in turn has two subsidiaries, Performance Chemicals, where it is nearly 93% setting up our ammonia project. Ammonia project in turn would have offtake arrangement with both SmartChem and Deepak Fertilizer, because ammonia is used across our product categories with the exception of IP. Platinum Blasting Services, which is an Australian company which is into blasting services, we hold 65% stake there. It's a company which is in last 10 odd years, we've had a fairly good growth run, I would say. It's perhaps one of the most profitable blasting companies in Australia. And with the mining activities in Australia, we see strong growth prospects for Platinum Blast. And in a sense, it's also synergistic with our technical ammonium nitrate business. Next slide, please. I think these are some of the points which I think these are more of locations of our plant, which my colleagues have covered already. Next slide, please. So in terms of our overall financial performance, if you look at our numbers, revenue, EBITDA, and PAT over the last 3 odd years, and if you see the trajectory, you would notice that initially, of course, in 2019 and 20, particularly both on the acid and fertilizer business, the capex that we had done, there was a ramp-up phase both on capacity utilization standpoint and also the differentiation journey that my colleagues spoke about. The margins were muted in 2019-20. And also 2019, we had large trading portfolio in industrial chemical, which then we restricted to trading in IPA. And to that extent, some of the trading margins had, in a way, had sort of vitiated our overall margins. So I think that transition happened from 2019 to 20, and then from 20 to 21 last year was a year where a lot of our capex that we had done had started bearing fruit in terms of bottom line. Both Mahesh, CNB, Mahesh spoke about the journey, differentiation journey, which had both volumes ramp up in 21, also margins ramp up based on the kind of premium that we were able to get in the market over competition. Also, acid business, which was again, we had set up the Dahej merchant acid capacity. The initial phase of that had some teething issues, both on the cost of production side as well as capacity utilization. By second half of last year, we got over some of those challenges, and that started reflecting in our numbers last year. IP, of course, did well last year, and we were, I think we've been making this point even in our other interactions that IPA, of course, was an exceptional year last year, but still was only 15-16% of our overall sort of bottom line. To that extent, my colleague Rajiv did sort of elaborate in terms of the efforts that we are making in moving to high margin segments in IPA. So while IPA, of course, compared to 2021, 22 has seen obviously reduction in margins, but overall, if you would see, H1 margins have been still good. And this is in the backdrop of sharp increase in the raw material prices. I mean, if I put some of the numbers in Q2 this year, which is part of the first half, the YOY ammonia prices went up almost 150-160%. Even RGP, which goes as a raw material in isopropyl alcohol IPA, went up by 60%. So there was an element of lead and lag effect in terms of passing on those sharp increases in the raw material prices. Also, as you would know that for us, the chemical segment, Q2 is generally a lean period. Because of rains, the mining activities are practically not there. And both nitric acid and TAN, they go into mining activities. So there are obviously both volume and price. There is I think subdued margins in Q2 typically if you see across years. So the effect of that came in our numbers in H1 of this year, and therefore the chemical. And I think there was a question as I saw the Q&A chat where I think there was a question on why our chemical segment margins were subdued. So I think the combination of both sharp raw material prices and the lag effect, and also Q2 being generally a lean quarter for chemical segment. That said, as such, in terms of absolute numbers, both TAN and acid did better YOY. The other aspect that does play a role is as you pass on the raw material prices in your finished good prices, in terms of the percentage, even if you're making better margins or rupees per ton, by and large, similar margins, in percentage terms, they do come down and they show a lower number. So I think those were the effects in the first half. Fertilizer segment continued to do well. That said, I think as Mahesh also explained, that sometimes the sharp increases in raw material prices in short term, you would see reflection of that in the margins. But in long term, so long as your strategies on the value-added products where you are passing on the benefit to the farmer and the whole MCBR aspect that Mahesh spoke about, our ability to pass on increase in raw material prices would always be far more, I would say, compared to what if we were following a plain vanilla product strategy. And that to that extent, one needs to look at fertilizer business more in terms of its long-term play and the value add that we are doing through crop tech and some of the new products that we are launching in the market. Next slide, please. Overall, from a balance sheet perspective, also there's been a transition in last 1.5 or 2 years. Both the aspect of increased margins, increased EBITDA, therefore, and also efficient working capital management. We've seen in September 21, for example, our net debt to equity is nearly 0.53. Net debt to EBITDA numbers are 1.63. And here I must mention that out of 1,621 crores of net debt, nearly 930 crore is for ammonia. So as such, in the operating operating sort of companies for the existing business, the net debt was practically almost less than 700 crores. And also, as you see on the right side chart, cash flow from operations in last, particularly FY21 and H1 of FY22, have been strong sort of cash flows from operations. FCCB tranche 1 got converted during the last quarter, that is in Q2. And as they convert the balance tranche, I have further sort of effect of that on net debt or the overall debt on the book. We also post H1, we've successfully raised 510 crores through QIP. So overall now there are 12.05 crore outstanding shares post issue of QIP. And that's would further sort of strengthen our balance sheet. The point that I would want you to take away from this slide is that our existing balance sheet, as well as the strong cash flows that we continue to generate quarter on quarter, they do sort of, have in some sense, there is a strong foundation, or I would say the ability to successfully implement the two large capex plans that we have undertaken. Banks, we are practically, we are relationship with both public sector as well as private sector banks in our consortium. And to that extent, funding of these projects, along with our own internal approvals, is something that we are quite confident of, and delivering these capex plans in the plan of the timelines that we have set for ourselves. I think that's pretty much what I wanted to mention on this slide. Just go to the next slide, please. In terms of the project update, and Arun mentioned about the progress, but in terms of its financials, in ammonia, we have total plan or the total investment planned is 4,350 crores, out of which we have already incurred 1,797 crores, which has a debt component of 930 crores, and rest we have infused through our internal accruals and the additional equity that we raised earlier as well through rights issue and recently to QIP. The balance investment of 2,553 odd crore is expected from here on till Q1 of FY24. And also so as such, if you see from a capacity standpoint, ammonia expansion will come up in somewhere in Q1 of FY24, to be precise, May 23. Also, the TAN project in this quarter onwards, we and the total project cost there is 2,200 crore, out of which we have already incurred 350 odd crores. Between from here on till let's say Q1 FY24, which is when our ammonia project is coming up, we would be investing somewhere between 700 to 900 crores in TAN, and then the balance investment in TAN would be done starting from, let's say, Q2 FY24, till we commission the plant in Q2 of FY25, and which would increase the capacity of TAN from 4,86,000 tons to 8,62,000 tons. So that's the capex plan in terms of numbers. Overall, we are funding ammonia project at 60-40 debt equity, and we have already significantly sort of tied up the debt portion. As far as TAN is concerned, we are funding it at 70-30 debt equity, and most of the in-principle sanctions are in place. We are in the process of financially closing the project, and once that happens, then we would start sort of accelerating the construction on the ground. Next slide, please. I think the point that you would also, if you would take it from this slide, is that as the ammonia project would start generating cash, the peak debt or in a way peak for TAN would still be about 3 to 4 quarters after we have commissioned ammonia plant. So essentially, these peak debt for both these projects would not coincide, and they would also be staggered. The other aspect that we are obviously also looking at, while at the base case level, we are looking at funding these at 60-40 and 70-30, as I mentioned. But depending on our internal cash that we are and how internal cash is generated, we would certainly like to keep the debt even at a lower level than the base case at which we are financially tying up. That, like I said, is something that we would take a call over next 4 to 6 quarters, depending on our internal generation. In terms of recent update on shareholding, as I was mentioning, that we are, we had raised QIP recently in October. What you see on the right is some of the institutional shareholders. We are now included in MSCI India Domestic Small Cap Index in November 2021. Promoters hold 47.6%. Now, there is one confusion that is there, which I want to clarify here, that promoters have pledged only 10.3 million shares out of their total 57.4 million shares, which is 17.9% of promoters holding. Rest of it is non-disposal undertaking or negative lien that we've given to our various financial partners, including IFC. And somehow that, I think that data doesn't reflect properly, and there are questions always whether we are holding, our promoters have almost 92% or some number thereabout as the pledge, but that's not factually. I want to sort of clarify that only 17.9% of promoters holding, which is 8.5% of overall holding of the company, is what is pledged. And this is again some loan that promoters have taken to infuse equity into the company. They have backing of other assets as well, and as and when they liquidate, they would pretty much be in a position to retire those loans. It's more of a, I would say, an interim arrangement, and as you would see that the percentage of shares of their shares as well as company shares not significant for anyone to be concerned about. Next slide, please. I think let me just quickly wrap up what my colleagues have already mentioned, so that we leave enough for Q&A. Overall, I think there is a market leadership in our key product segment, and there is a strong demand we are seeing in almost all of our products, and which we believe would really form the base for our growth and profitability. There is a transformation that Mr. Mehta also spoke about, from commodity to specialty, or let's say from product to solution, which would improve our margins as well as the brand strength, or in some sense would further solidify our positions in these product markets. Overall, the utilization levels we still have scope in terms of utilization levels in our plants. There is also capacity expansion, both debottlenecking as well as the greenfield capacity expansion, and the backward integration, which is ammonia. I think all of these three initiatives will drive the long-term growth for us. In fertilizer, I think it's a play that my colleague spoke about, which is crop-specific product to farmers and providing them that marginal cost-benefit ratio for us to strengthen our position in the market of a player or a product that provides that value to farmers in terms of productivity, in terms of their the other features of their produce. In pharma and specialty chemicals, is the China plus one shift of global supply chains that is helping us overall from a strong demand standpoint. IP business, like my colleague mentioned, that we are moving to place our products into higher margin applications, and there our ability, both compared to our competition, domestic as well as import, our product qualifying for fine pharma requirements or meeting pharmacopoeia requirements puts us in an advantageous position in meeting these market requirements. In mining chemicals, I think overall it's the mining sector as well as infrastructure sector growth that would give us advantage in terms of, or would really drive the demand. Now there are two aspects, and I think perhaps Tarun also covered that. And then there are questions saying what is, if the coal with renewable capacities coming in, coal perhaps will see muted growth. There are two aspects. One is that even for the same level of coal production, the overburden removal requirement is increasingly going to be more. So we are going to see more blasting requirement, even if the coal production were to remain at the same level. Also, when you look at countries' energy mix, so from a capacity point of view, it is fine that we are going to see more renewable capacities. But please remember that renewable capacities and their plant load factor is significantly low because they operate only in certain season, they operate only certain part of the day, and therefore, in terms of number of units that renewable generate vis-a-vis the other conventional source of power, is still there is a lot for renewable to cover. And as a base load, country would always rely on coal-based plants. And one of the challenges that, as you would also be reading, is where European countries are facing, is that a lot of the renewable capacities, because of weather changes that have happened, haven't delivered the kind of power, and there's been certainly a shortage. So as such, the base load as well as the overall production of plant load factor of thermal power plant would always mean that India would continue to rely on coal-based power plants. And to that extent, we don't see a challenge coming from renewable as far as the demand is concerned. Overall, I think the greenfield ammonia plant is making good progress on the ground. And these both ammonia and TAN projects, from an IRR perspective, we believe at very conservative assumptions, they do make high teen kind of IRRs, equity IRRs. And if the global commodity cycle, and some of it what we are hearing even before this whole commodity cycle, actually inflation happened, that ammonia would see more inflationary cycle in coming years. And if some of that does pan out, then we believe that the returns on ammonia on standalone basis would also be significantly better than what we are assuming in the base case. Overall, all three sectors are well aligned with India's economic growth, as Chairman also mentioned. There are going to be positive tailwind for us. And with the strong financial performance and our current balance sheet, we are well poised to capture that growth. And that's something that I'm sure quarter on quarter we will update you on how we are progressing on each of our strategies. But for the time being, I think that's it from my side. Abhijit, would you like to take up the questions that you would have received in the Q&A panel, and then we could all of us could together can answer those questions.
Sure. Yes. Thank you so much, Amitabh, and thanks to everyone. Thanks to the entire management team for the insightful comments, and we finished well in time as well, leaving enough time for Q&A. Before I start to read out the questions, I would just like to respond to one query that several people have asked regarding the presentation and whether that's going to be made available. So just to clarify that the PPT will be put up on the stock exchanges after the conclusion of this event. So you can access it from there readily. Moving to the Q&A, I've grouped this sort of into topics so that the respective business head could address the queries, probably with some assistance from Mr. Amitabh Bhargav as well, wherever required. Maybe the first one I'll just start with is actually something that is post-project commissioning, post the ammonia and TAN projects, whenever they are fully up and running, which is probably say FY26. The question was that at that point, the company should be generating very strong cash flows, probably in the region of 2,500 crores a year. What plans does management have to deploy those cash proceeds? Are there any significant expansion plans in specialty chemicals or any other such new business areas?
So at this stage, it will since we have nothing that we've discussed at the board level that needs to be disclosed here. We are mindful that the next two projects or two projects that we are working on, they would require both financial as well as management resources. So it's a little early for us to plan for the next capex growth. But if you see segment-wise, while by and large on the CNB sector, we still have capacity utilization to ramp up, and the whole journey there we are taking is more on value add, where we are moving from plain vanilla to smart tech, now to crop tech, and also enhancing our overall market on the non-subsidized fertilizer. So in foreseeable future, capex there is more going to be on product development as opposed to a conventional capex of increasing the capacities. In TAN, as my colleague was mentioning, that TAN, the way overall demand is growing, and every 3 to 4 years would have, let's say, a gap would start emerging in the overall demand versus domestic supply of nearly 200,000 tons. So we'll have to see, as we would also monitor the growth that happens on the infrastructure and mining sector. It would certainly open up opportunities for next expansion, but it's very, very early because we are right now, we have to first deliver the 376,000 tons. Nitric acid likewise has, given the kind of strong demand we are seeing from downstream, would certainly open up opportunities for, if not new capacities, expansion of existing capacity. But in short term, I think we would be focusing more on improving the reliability of our existing nitric acid plants, where we can deliver such products are seeing growth, but it's too early for us, and there's no discussion at the board level on any future plans beyond these two projects that we are delivering currently.
Yes, thank you for that. With that, let's dive into the respective products. There have been several questions about the TAN business in particular, so maybe I can request Mr. Tarun Sinha with some support from Amitabh to answer these. Anything unique about our manufacturing process in TAN? Do we have a patent, or did we borrow the technology from someone else?
Right. So I can give a high-level picture on this. Certainly, the details can come from, let's say, President Manufacturing of our group, who's not present on the call today. But I can safely suggest that we, across the 4 current production lines of TAN that we operate, we have a mix of different technologies which we have actually adopted to national TAN manufacturing technologies, which have been adopted and basically customized, to suit our needs. And that's how we have been running, the 4 production lines as we speak. So a combination of those technologies. And as my colleague, Mr. Arun Vijay Kumar, spoke about the greenfield, TAN plant. Again, that has got the technology of Orica, which is actually the world leader in manufacturing TAN by a large margin. And so again, it's a combination of Orica and Casale, those sorts of technologies that we will use in the greenfield side.
I think one aspect that I would add to what Tarun said is that while technologies and the license for these technologies are obviously taken from some of the world's largest players as well as license providers, it's the adoption of this technology for Indian ambient condition has one of the areas that we have excelled in last few decades, and some of the learning continued even as late as last 2 to 3 years, where the product quality of particularly prills, low density prills, requires constant sort of upgradation, which makes it acceptable to not just the domestic players but in international market, because we are also marginally we also export our low density product to the neighboring countries. So it is also a question of adopting these technologies and bringing in-house innovations to adapt to Indian ambient conditions so that the product quality remains strong. I think that's another aspect of manufacturing.
Thank you. Another question is regarding the existing mix of manufacturing capacity that we have in TAN between ammonium nitrate melt as well as the two solid grades, high density and low density. So any rough sense we could give on that, and whether that will be the same mix for the Gopalpur plant also that's coming up, and any sense of the approximate demand mix for these products, maybe in terms of end use segments.
Absolutely. So in our current, 4 production lines in that we have, and 3 of them being in Taloja, Maharashtra, and 1 being in Srikakulam, there is a significant fungibility built between the 3 types of TAN products that we produce. And again, those 3 types of TAN being AN melt, then high density solid, and low density solid. So that's the first point, a lot of fungibility which has been built between different types of plants. Now, if I go one step further, what does that fungibility mean in real sense? Basically, it would include either AN melt versus AN solids, let's say in certain plants. So there's a fungibility, those plants or those lines, whether we choose to produce AN melt or AN solid. And in some cases, there's a fungibility between AN solids and AN solids, which means whether we produce high density ammonium nitrate or whether we produce low density ammonium nitrate. So a fair amount of flexibility is built in already. The same fungibility and flexibility will be applicable to the greenfield plant in Gopalpur as well. Because as I said earlier during my presentation, we will be producing all 3 types of TAN with fungibility built between the production lines in the greenfield site itself. So how does it help us? That's really important for us to be aware of. So having this unique flexibility, in the form of these fungibilities of products, like I talked about, we are able to service, the requirements of our customers and consumers in a much improved manner, because a number of our customers and consumers buy more than one type of TAN from us. So it's the same buyer, let's say, same consumer may buy, this TAN today, that TAN tomorrow, that TAN day after tomorrow, and that is depending on their end use and commitments from time to time, because they are working with their consumers and they have their own commitments on what to supply to their consumers. So hence they come back to us saying this is what we need from time to time. So this also, by the way, gives us a competitive advantage, compared to any other player in the industry. So it's not just having 3 types of TAN with us, but also being able to produce more than one type of TAN in the same given plant to meet the market demand. So that's how we look at it. As I said, the demand pans out for these 3 products from time to time in different ways, and we use the fungibility in our system to cater to those needs of our customers.
Thank you. Can the margins on the new TAN capacity that's coming up in Gopalpur be significantly higher than the margins in the existing TAN capacities in Taloja, given the freight cost advantage as well as the fact that it's a newer and more efficient plant being set?
Sure enough. So talking about the freight, absolutely the logistics cost from Gopalpur plant to the eastern region and adjoining central region of India will be lower compared to that from our current plant in Maharashtra. So the beauty of that is by having our manufacturing facilities located both in the east and the west coasts, we will be able to run, and that's the plan. We will be able to run what we call as optimal logistics cost model for the entire business of TAN, which is about moving close to 9 lakh tons of TAN every year from different plants on the east and the west coast. What's the most optimal logistics model which works for us, which works for our customers and consumers, and that's the model we will run. So both parties will win the process naturally. And the other thing is, because of this flexibility of having 2 plants on 2 different locations, the reliability of supply will improve quite a bit to our customers and consumers. And again, that will be beneficial to both parties, the people who do business with us, and of course to the company. That's how we look at it, the whole logistics aspect of a fully integrated and business 3 years from now.
Thank you. The next one is regarding Solar Industries has mentioned that it prefers to set up small plants at the client's mine itself and use ammonium nitrate melt there as its effectiveness is higher versus solids. So do you believe that demand for ammonium nitrate melt will increase more in the future at the cost of the solid grade TAN?
Again, excellent question. So absolutely, AN melt, has advantages in certain situations, I would say, over solid TAN. So, when customers buy, let's say, solid TAN, they have to first melt it in liquid form for the purpose of converting it into explosives. That's the process of manufacturing explosives. So buy solids, then melt it and convert it into explosives. That's what solar industries would do. So by buying AN melt directly, instead of buying solid and then having to melt it, not just solar industry, but any explosives manufacturer would save on the solid melting cost, because as I said earlier, solid has to be melted first. So that is a cost saving to the customers of AN melt compared to AN solid. Besides, requiring less storage capacity. When they use AN melt, they need very limited storage capacity, just in the form of certain tanks. And our logistics model is set up in a way that we basically service, through a fleet of tankers, which keeps supplying AN melt to the customers. Whereas if it is solids, then they have to put up warehouses, which need licensing, a lot of manual handling, double handling, all of that, safety aspects, all that goes in handling solids. So as a result, and combination of all of these, convenience plus safety factors and cost factors, a lot of companies, and solar industries being one of them, do prefer buying AN melt in over solid TAN. And certainly we are seeing trends emerging in the market for us, where the attractiveness of AN melt and hence the demand of AN melt is actually increasing. And that's a good sign for us, because it helps the consumers, customers, as I said, but also helps the company.
Thank you. There are a few questions regarding the potential impact on TAN demand from the move towards green energy, and therefore any possible pressure on coal mining. I believe both Mr. Sinha and Mr. Bhargav have already spoken about this on the call. So, gentlemen, unless you would like to add something to that, can we, request the participants to refer to the previous discussion? And by the way, I would just point out to all the participants that the video of this event will also be put up for public viewing. So you could refer to the relevant sections. Perhaps, management spoke about these before those questions were sent. After those questions.
I would like to add here, is, I think we have covered it in detail, so we will not repeat it in the interest of time. But let's remind ourselves of the position Government of India took in the recently held COP26, which was held in Glasgow, UK, where our Prime Minister probably talked about 2070, and that's the kind of timeline he has in mind for looking at coal, so to speak. And as Amitabh explained very nicely, coal is here to stay.
Sure. On downstream products with TAN, is there scope to make any new products that are more value added using TAN as a raw material? I mean, I know we spoke about doing these value added services to customers by trying to help improve their efficiencies and all that, reduce their cost of production. But is there something else that can be done in terms of exploring further value addition?
Absolutely. So when I talked about in my presentation about forward integration in the form of different types of explosives manufacturing, that's what it meant. We are getting into certain types of explosives, so away from TAN, using TAN, manufacturing different kinds of explosives, which are unique. And I'll give you just one example, which is already prevalent and it's working very well in the market. And that explosive is called as ANFO, which stands for Ammonium Nitrate Fuel Oil. Worldwide accepted, explosives. We are the ones who have pioneered that, using our own TAN in India, and that's really working very well. Some of the mining companies' names that I mentioned during my presentation, who we are directly dealing with, rather than having to supply TAN as TAN and then waiting for someone else to take that explosives to the mining industry. We are going direct to the mining consumers, and ANFO is one of those examples. Likewise, there are a number of new products in our pipeline of innovation using TAN, which will be launched when they are ready.
Thank you. There was one question about the business economics of the new TAN project coming up. I think Amitabh already mentioned that it will be an ROC in the high teens, an IRR in the high teens rather. So maybe we could leave it at that. And a question about any export opportunities in the TAN business for Deepak Fertilizers. Are there any significant export opportunities as well?
Yeah, absolutely. So I think I mentioned in the very first slide of TAN, which again, the audience will see when the presentation is uploaded on the stock exchange today. But the first slide itself, one of the blocks on the left-hand side, in the last block, one of the four actually, talked about exports. So we do export, to regions like South Asia, Middle East, Africa, Southeast Asia, and we will continue to do that. And we are also gradually opening up, new markets for exports as we add more capacity to our stream, which is in the form of the new greenfield, plant. Naturally, our decision, whether to export and how much to higher margin than the domestic margin, and also keeping in mind that our exports is important. We will continue to do that, but under some guidelines and under some criteria. It's not that we are seeing ourselves as a heavily export-oriented business.
How long will we take to reach peak asset turns for the new TAN project? Can we expect to get it, within the first full year post-plant commissioning?
You mean the production
on capacity?
Yeah, in terms of, let's say, ramping up to optimal capacity utilization, will that happen within the first year itself?
Arun, you're on mute.
Mute.
Sorry.
Typically, these type of plants will take 3 to 4 months to stabilize. So I would believe that we'll touch 100% continued capacity from within 4 months of the operation, and then the scaling up will start.
Thank you. And maybe one last one on the TAN business. This was with regard to how is ammonia volatility passed on in the TAN business. I think we've already said that it's a monthly pricing model, right? So every succeeding month it's passed on.
Yeah, absolutely. So if I can elaborate just in a minute, although I did cover it in my presentation, so I'll keep it short. So we work through a mix of contracts and spot pricing arrangements to pass on the rising cost of raw materials, and ammonia being one of them. The contractual arrangements, when I say contracts and spot, just one more line on contracts. So the contractual arrangements include contracts with price variation formula, and they are indexed to international and domestic price benchmarks. In many cases, there are certain volumes put on contract with a customer, but at the same time, for the same customer, some volumes are put on spot as well. That's another mechanism we run, and the rest, everything is on spot basis. That's how we manage the overall portfolio in terms of being able to pass on the cost of raw material.
Yes, sorry, I think we've got one more question on TAN in the chat box right now, which is any plan to set up a TAN plant in the overseas mining market?
As Amitabh was saying, our first kind of priority is to set up, the new plant in Gopalpur, and certainly, stabilize it, get the best out of it. And certainly, I think we will start looking at more and additional TAN plants in India, because of the growth that we are anticipating in India. We could look at potentially some tie-ups also as another model for overseas, countries, and that's something we can explore definitely as we move along.
Thank you so much, Mr. Sinha. The next set of lots of questions is pertaining to the ammonia project. So, Amitabh, with your permission, shall we take those first?
Yeah, we can take those. Yes.
Okay, great. So I think there were 2 or 3 queries regarding the gas tie-up for the ammonia project. Yeah. So at what how is gas availability and pricing for the plant? Will there be long-term contracts? Yeah, I think those are the broad lines along which the questioning is going.
So essentially, we would look at typically a 10-year kind of contracts, gas contracts, and would be a combination or a basket of different underlying benchmarks. So the options are Brent-linked contracts. There is Henry Hub, which is a US gas price benchmark. Those underlying linkages. Also, there is a domestic gas, an element of domestic gas that may can be a part of the portfolio, and domestic gas depending on the auctions, because we've seen that the players who are largely producing on the East Coast, when they come up with these auction quantities, their underlying benchmarks could also be one of the two benchmarks that I mentioned, or any third benchmark. So we will be building a basket of these. Now, one aspect that I think mostly people do get concerned about is what is happening on the gas prices internationally. Now, those gas prices are essentially, we are looking at the spot prices wherever there are long-term contracts which are linked with Brent or Henry Hub. The volatility obviously there is not nowhere close to the volatility that we are seeing on the spot side. Meaning that if, let's say, we had a particular slope linkages with Brent, Brent moved somewhere from 55, 60 odd dollars to about 80, $82. And to that extent, if you see the increase in Brent linked gas would be more of, let's say, 30, 35%. While what we are seeing on the spot market are huge, because in Europe and other places they are talking about upwards of $40, $50. So that one should not confuse with what's happening on the spot side of the market, and therefore gas prices would be the basket that we would build, would be underlying energy indices which would not or do not have that kind of volatility. And also, we are equally seeing today ammonia prices, huge increase in ammonia prices. And to that extent that they reflect the prices of energy, which underlying, raw material for ammonia. So one is to sort of summarize, there are going to be long-term contracts, 10-year. Underlying benchmarks would be energy indices, which per se have not that much of volatility, and that's the way we would be running our supply contracts.
Thank you. Then there's there are a range of questions regarding the economics of the ammonia plant. So you've already spoken about this in the past, but in terms of how much saving per ton of ammonia manufactured do we expect to get? Some related questions about where do we see our margins going at the end of the ammonia project? So any quick comments on that you would like to offer?
So one is I would want audience here to look at ammonia. For us, it's a buy versus manufacture decision, and the economics of buying or versus economics of manufacturing for us, there are a few factors. One is that when we buy, we incur almost $80 to $90 of transportation costs from bringing it from somewhere, let's say Middle East, which is a common source of bringing in ammonia or importing ammonia in India. So FOB Middle East, you add almost $80 to $90 because of transportation costs. What we also have in an ammonia plant is we are, by government of Maharashtra, we have an ultra mega project status where 75% of our capex would be recovered through state GST, refund of state GST, which is 9% of the transfer pricing at which we transfer ammonia from our downstream plant to our, or from our ammonia plant to our consumption plants in Deepak and Smart Chem. Now that almost is also I mean, again, depending on what transfer price of ammonia you take, if it is $500, you are talking about almost $45 of saving. If you look at current prices, which are nearly $1,000, you are looking at almost double of that, almost $90 of saving just by way of SGST refund. And the third aspect, which is it being a exothermic reaction or where additional heat is generated, we would also produce steam, which we in turn would integrate it with our downstream plants, and roughly another $10 to $15 per ton of ammonia equivalent saving can be there even through that. So if you add all of these savings, you would, it really saves almost $4.5 to $5 equivalent of gas price when you add up these savings. So if we are able to get gas on a long-term basis at say $8 to $8.5 landed price, then it is as good as getting that gas at $4 to $4.5. And now, if you want to set up this plant in somewhere in Middle East on some gas source, you are not going to get a gas price anything less than this price from a transfer pricing perspective. So as such, you are, because of these economics for us, it's as good as setting up these plants in Middle East and perhaps at a cheaper capex, because the capex cost of similar plants in Middle East would be at least 20 to 30% higher, and my colleague Arun can perhaps throw more light on that number. But net, you are from a regional competition or competitive standpoint, you are actually one of the lowest cost producer because of these advantages. And the other aspect that you should remember, that for us, it is not just, and people tend to compare our ammonia, and the question sometimes is why other fertilizer companies are not or setting up their own ammonia plant. We are going to use this ammonia not just in our fertilizer, but largely for our chemicals. So it is the economics of our downstream chemicals that also play a role in whether I buy ammonia or we make it. So that is as far as the economics is concerned, and therefore, so long as you will remain a cost competitive manufacturing plant, you would always be better off buying it as opposed to, or manufacturing it as opposed to buying it. Now, how much savings are you going to make I think the million-dollar question is, what is the price of ammonia, FOB Middle East? We've in the past bought ammonia at $420, $430 FOB Middle East in last 10 to 15 years. But if you look at the projections that most experts are making, they are talking about this going to 600, 650 or thereabout in FOB Middle East. So if you take even the most conservative price that we ourselves have borne in last 10 years, we are talking about at least $240, $250 of saving per ton. But if this number could be very different if the prices inflationary cycle in ammonia plays out the way many experts are expecting. So I think ammonia is a commodity which will see that cycle, but one needs to look at it from the point of view that if you are the cheapest cost producer or one of the cheapest cost producers, you will always be better off. And in good cycles, you will perhaps make the kind of returns that would recover the cost of this plant in a very, very short period.
Thank you. One clarification that someone wanted was whether the ammonia that's going to be produced at Taloja will be transported to the Gopalpur plant for the TAN production. I guess the answer to that is no, right? At Gopalpur, we'll be importing fresh ammonia production.
Yes, we will be importing ammonia there, and we have sufficient consumption in Taloja as well as in Dahej, because Dahej is close by, and sometimes we feed Dahej from JNPT port. So as such, our production here can be utilized in our facilities here as well as in Dahej, and we would import on the East Coast. And then there, the whole transport, sort of port, storage, pipe linkages, etc., are comparatively would have less challenges in terms of congestions, demurrages, and so on and so forth. So their economics is a little different, and therefore we will continue to we have, of course, have an opportunity to manufacture our own ammonia there. That's a lot of factors have to fall in line, including availability of gas, etc.
And the gas contract itself, is there a timeline that we can put to when we expect to sign it?
So we are in the thick of discussion with 3-4 players. Our requirement of gas, which is while full-fledged requirement is from March, April of 23, but we would need some gas, smaller quantities for our commissioning, etc. Arun, when would that quantity, smaller quantity, be required? And
September onwards. From
September onwards. So we have time. We are working on heads of terms with these players, as well as the lawyers from both sides are also looking at nitty-gritties of the gas supply.
The initial quantities are very less, so we may go with spot also, depending upon the.
Yeah, I mean, those are very, very small quantities. So we have sufficient time to.
Sure. The cost of production of ammonia at the new and the old facility, I think we've specified in the past that the energy consumption norm in the new unit will be about 29 or 30 MMBTU per ton. The older one is probably around 36 or 37. Is that correct?
Are those correct figures?
Yes.
Great, thank you. Then the reasons for delay in commissioning the ammonia and the TAN project so far in the past, and also the cost of land has gone up much higher compared to our original estimates. So any color on why that happened, and what gives us comfort that this won't happen again?
So as such, in ammonia, the delay was mainly on land acquisition, and other than like acquisition, conversion of that land, because we acquired that land from multiple individual owners. It had to be converted through MIDC process into industrial land, and the whole process took time, and somewhere the whole COVID situation also didn't help us. So the delay was primarily for that, but now for nearly 8-9 months since the construction is in full flow, and as you've seen the pictures as well. So we have land, all the approvals in place, construction on the ground is going on, but we did not lose as much time in a sense as optically it appears, because we continued with a lot of the engineering and pre-construction work. We continued with that, and that allowed us to shave off some time. Now going forward, now we have with Toyo, we have a fixed price, fixed time contract. So also we've seen one second wave of COVID, and we've seen even significantly sort of heavy monsoon in Taloja region this year. But both have not, in a sense, affected us in a manner that we need to be worried about. And maybe Arun can also throw some light that we are actually carrying out work at different multiple sites to avoid any challenges that we may face.
Yeah, because I mean, it's not a delay in commissioning, it's a delay in starting. So yeah, the commissioning time has brought down by 6 months, because we worked a lot on the learning side by incorporating the problems that KBR and Toyo faced in the last 3 projects, and dovetailed them into our P&IDs and our designs, so that we don't get into that problem. This included addition of few equipments, few safeguards, new kind of lockout systems. So a lot of engineering has been done to ensure that the startup would be seamless. And that's what we see on the ground. In April we started, and in December we are at 60% progress, which is I don't think in my 30 years of project career I've seen such a progress happening in the initial 9 months of a project. TAN project, definitely we had a delay in locating the land. First we thought it comes in Paradeep, but due to logistics we couldn't get Paradeep, then moved to Gopalpur. So that was basically the delay. But now again, that project also we are in control, and we'll be delivering it on time.
As far as the question on cost is concerned, the increase in cost was definitely there on the land side. And that was because of we wanting a land just right across the road, so that the lifetime economics of piped ammonia and integrating some of the utilities and energy, from one plant can be used in the other plant. Those lifetime economics we didn't want to sacrifice. Otherwise, we would have acquired a land a few kilometers away, and we would have had to sacrifice those economics. So we insisted on a particular land, and then land acquisition, as you know, is a bit of a tricky issue, and people get to know that you need particular land. People tend to afford that, and part of it also because of this whole conversion process that took time in the midst of COVID. But other than land cost, I think the increases were also because once you have the land, that's when you have a better clarity on the engineering and the construction. And that's what, when we got the offer from Toyo, there were changes based on the exact land and the soil quality, the ground quality. Number two, certain infrastructure facilities that we had earlier planned that we would rely on the external environment, whether it is pipeline, water pipeline, or power island, or zero liquid discharge. Those we decided to make it part of our project and project cost, so that there is a greater reliability. And then the factors of exchange rate, also factors of having to maintain certain or extending the guarantees, insurance, etc., for the plant equipments that we were in the process of purchasing, as well as had already brought to our site. That also added to the cost. Then, of course, there was a time cost in a sense of during construction, because we'd already drawn on some level of debt, and that debt continued to. But that said, I think we are. If you look at our completed cost, we are still going to be from a equivalent plant, or a plant which is, let's say, 2,200 tons plant scaled down to 1,500 DPD. We are still better off in terms of our overall cost. So we haven't lost the economics there. Yes, the advantage that we had originally, that some of it has got lost, but that doesn't take away the economics of the plant.
And we need to keep in mind that post-COVID, there was a 30 to 45% increase in the commodity market itself, which is also absorbed in whatever increase that we are seeing. So that is one aspect. And second is the location of the plant was a part of our environmental commitment also, that we'll be reducing the trucks that is flying, carrying ammonia from JNPT, around 70,000 trucks that comes to site. So it was a commitment by our management that we'll reduce the surface pollution by having this plant across the road. So that also led to some restriction on moving away from the current location to another location for setting up this plant. So if you look into the environmental studies that we have done, this plant will reduce the surface pollution in Taloja area by close to 9%, which is a big contribution to the environment itself.
Just two last quick things on ammonia. One is how long will be Toyo's involvement in the project commissioning? Till what step of stabilization will they be around? Will they be around to see us hit 100% plus utilization before they hand over the keys to the plant to us?
Current contract setup is still the performance guarantee test run,
which is the full utilization.
They have to prove the capacity, they have to prove the purity, and they have to prove the efficiency.
Right. And the last one on ammonia is your thoughts on green hydrogen and green ammonia, and any plans that the company has in mind to reduce its environmental footprint.
A lot of discussions are on, and a lot of experiments are also on, but the commercial viability of those experiments getting converted into a green ammonia plant or a blue ammonia plant is still far away, because one of the key aspects of moving from, let us say, high end of gray, which is our plant, to low end of blue is the effective utilization of carbon dioxide. And ONGC is still working on their EOR, so they still are not finding it right business model to get there. So a lot of work is going on, a lot of technical evaluations are going on, but it is a little bit far away from now to say when this gray will become blue or blue will become green. But definitely they are in the plans, and R&D team is working on that.
Thank you so much, Mr. Arun. With that, we are done with the ammonia section. I'll quickly move on to the industrial chemicals piece, if I may. Any plans that Deepak Fertilizers has to increase capacity in IPA going forward as well? And also, are we facing any challenges in maintaining margins in IPA versus the competition?
See, one is that we are at this moment very clear that the propylene-based capacity expansion, the current economics do not make that a viable expansion. We are evaluating acetone-based expansion, but a lot of the things, including the sourcing of acetone, there are duty structures on both sides. All of that is something that needs evaluation. So as such, I would, in summary, propylene-based expansion, no, we don't have any plans. Acetone, we are evaluating. As far as the expansion or the margins are concerned, Rajiv, would you want to just throw light? And I think you did mention the aspect of the new applications that we are getting into, which are higher margin. And the reason we are able to do that is because from a purity perspective, our IPA is alone, in a sense, meets some of the stringent pharmacopoeia requirements.
So there are multiple things happening here. Whereas the propylene-based plants are more expensive, and it makes sense to have set up acetone-based IPA plants today. But in terms of the purity that a pharma process will require, it is the propylene-based IPA which stands out. So therefore, in order to sustain our margins, it makes sense for us to extract the maximum out of our existing propylene-based plants, which have got superior impurity profile. And therefore, we are able to cater to high-end applications based on propylene-based IPA.
Thank you. And there was one question on nitric acid as well. Do we plan to forward integrate or explore downstream products from nitric acid? As there was a mention earlier in the presentation about the wide scope of business opportunity from nitro aromatics.
At this moment, there is nothing that has been discussed with the board.
Okay, thank you. Let's move on quickly to the crop business, fertilizer business, from Mr. Mahesh Kirthar. When he talks about exclusive access to technology for smart tech, is that from one technology partner outside of India? And is there no one else globally who makes that particular technology?
So this is a global player, and we have an exclusive access to this particular RM which goes into the production of smart tech. And we have done some of our own, let's say, plant level modification in the process. Both are unique to us right now. And this particular technology, RM access, is unique to us. Now, people, when it comes to, I can't say there are no parallel technologies available in the world, because you can find different routes to innovate and bring different products. But this particular product access to smart chem is exclusive for India.
Another question is, how does your smart tech and crop tech business compare with the competition, the leading players in the listed space, at least, like say Coromandel International? How would you, position yourself?
So I think without going into any specific company, as I said, that how do we differentiate? Number one, we have brought in this enhanced efficiency into the product, which means the nutrient use efficiency has gone up, and it is unlocking that, right? So exactly similar technology we haven't seen in the market yet. from any of the players. They might come up, but at least today we don't see that. And when it comes to crop tech, where also we have taken a route of producing the balanced nutrition fertilizer through a complex route, which means in the plant. Some companies have tried to add 1 or 2 micronutrients to the NPKs, but nobody has come up with a complete nutrition product, which is containing 8 nutrients. Nobody has on date. And this is very crop specific. There are other ways you can make crop specific, which are called customized fertilizers, which are under the policy of Government of India, where you actually use DAP and these raw materials, and then you can customize that. Their product need to be very specific within 200 kilometer range. From that, the different companies in the past have tried customized fertilizers, and there were very limitations on that because that needed subsidized raw material as well as very specific to 200 kilometer and sort of data. We have gone ahead with a different approach. We have gone ahead with the crop specific. It is applied to that crop anywhere in the country. Right? So similar product is not right now available in the market. However, micronutrient fortified products are available by different players.
Okay. And one last on the crop protection, on the crop nutrition business. On the fertilizer subsidies and the margin situation in the context of escalating input costs. So are we expecting further subsidy support from the Indian government? And in general, are we confident of being able to maintain margins despite this inflationary environment?
So, subsidy per se does not go and sit in your margin. What happens that there is a nutrient-based subsidy policy by the government. They take every year note of what is the raw material prices, which is Indian companies are importing. They are largely known, India CFRs for ammonia, for phosphoric acid, for MOP, and for sulfuric acid, for sulfur. They are taken into cognizance, and based on that, how they want to make the product affordable to farmer. So there is a play between raw material price, subsidy, and MRP, right? So it does not happen that at subsidy increase that you get that fully with you also pass through. When the raw material goes down, you also pass through it. RM goes up, you also pass through. So normally it's an annual phenomena. By every year, April to March, there is one NBS declared, which government is now considering the new raw material pricing accordingly will decide the NBS. This year, in between, there was significant rise in the raw material prices. Hence, government intervened in between, and May and October, 2 times they revised the subsidies. So normally it's a play between cost, subsidy, and farmer price, MRP, you can charge from the market.
But we expect to be able to sustain our margins at the levels that we are making.
As I said, that there are 3 components to that. Some get through subsidy, some gets through markets. Certainly, that's what I already explained. The whole strategy that what we are doing is to even not sustain and enhance the premiumness.
Right. Thank you so much, Mr. Girdhar, for that. And with that, I just have the last couple of topics, which are, at a more corporate level, perhaps. A host of questions related to the non-core assets, particularly the mall in Pune. So, questions basically about, is there any timeline for divestment? Any proceeds that, have you appointed any agency, any likely proceeds on the sale of this land? Any other non-core assets also that we are, thinking of divesting?
So as far as the land and our mall is concerned, we had in the past, I would say, given certain mandates to intermediaries. Some of those mandates we can reactivate. There were certain, I think, challenges in terms of the ULC aspect, which by and large we are got over those challenges. And so for a period, we didn't want to go into the markets with certain restrictions, and to that extent, those restrictions are no longer there, or by and large done away with. Now, to that extent, we have a better ability compared to the past in terms of monetizing these. That said, I think this is a area that we would be evaluating. Today it's going to be a combination of the market price. It's a combination of, we have 2 or 3 different parcels there in terms of being able to sell it in parts, or being able to sell it one entire part as a whole. So all of those factors are being evaluated, and to that extent, what I think management has in the past made this point clear, that we do consider this as a non-core to our activities, and therefore we would find the most efficient way to monetize that. Modus operandi of how exactly we would monetize is something that we are evaluating from every standpoint, including taxation and so on and so forth. So based on that, we will take a call. But clearly, it's a non-core, and we would certainly be wanting to take that capital off the non-core business and put that back into the core business. Other than that, there is nothing non-core as such. From a business standpoint, our stake in Platinum Blast, which is the Australian subsidiary, is core in a sense that it is linked with the TAN business. From a financial standpoint, at any stage, if we find it, we get an opportunity where we get the right valuations, we are open to at that as well as in terms of monetization. But as of now, that business is growing well, and it's pretty much year on year, its growth in the bottom line is very encouraging. So we are monitoring the situation, and a lot also depends on the whole Australian environment, mining activity as well as the blasting business, and we'll take a call on that basis. But it is as such core activity or activity linked closely with our TAN business.
Thank you. Last couple of questions. One is, what's the peak debt basically that we anticipate, in coming years?
So I think we have answered the question earlier as well, that as far as these 2 projects are concerned, we are funding them. One ammonia at 60/40 and TAN at 70/30. So that definitely, at a base case, these 2 projects would add that debt. And debt, as far as ammonia is concerned, we have drawn almost 930 crores already. So what we need to see is the incremental from here. The timeline of that we've also shared as to how both these projects will get implemented and when they would complete. The factor which is in a way is variable. We are looking to fund it through this debt equity ratio is our own internal accrual. So if you see, for example, ammonia, while we funded the project originally at 70/30 and revised it to 60/40, but we have actually infused more equity than the debt that we have drawn. And to that extent, depending on our internal accruals and cash position, we may actually improve. There is no reason for us to draw more debt than what we need at a point in time. Also, the other aspect of the question on monetization of non-core, from a timing perspective, that if we are able to also implement the non-core monetization part, then to that extent, it further gives us the ability to use our own internal generation as opposed to drawing additional debt. So I think that these are the factors that one would, in a way, one needs to keep in mind. I don't have a number because as we started ammonia, also we didn't plan to sort of fund it more with equity, but that's what we are doing currently. So, it depends on these variables.
Thank you. And the last question is, apparently, a year ago or so, there were some media articles, media interviews in which we had reportedly talked about possible plans of demerging, the chemical business. So, is there any thought process around that? Yeah.
There's nothing that we have taken and discussed at the board level. So, I think beyond that, I won't be able to give any comment. Great.
I think with that, we've covered almost all of the questions that have come in. I'm sure I've not managed to cover 100%, but I'm sure the audience will excuse me for that. It's been a difficult job. And, I'd like to thank management once again for taking the time to share their insights. And thank you to the audience for patient participation. Amitabh, if you'd like to make any closing comments before we end the call.
Well, thank you so much, Abhijit, and your team for organizing this and conducting it so smoothly. And I'm really thankful to all the participants. There was a good response, and we'll be happy to sort of have follow-on discussions on one basis or in group situations, as to the extent participants perhaps have not had a chance to ask questions or absorb the discussions that we had. So we'll certainly, Deepak, my colleague, both of us are available for you for any further follow-on questions that we can either pose it to IFL or directly, and we are very happy to answer those. And thank you very much, all of you. Stay safe, and look forward to further interactions going forward.